David Kwan.
Here.
Dick. Andrew. Eshwar is not here yet, but is on his way. Dave.
Here.
Howard.
Present.
And myself, Frank Lovato, I am here. Orders of the day. We do have some time-certain items to be heard at 10:30 for the interviews to recommend to council for public board members. We have a few items to waive on Sunshine. We have 4C2, which is Cortex Agreement, 4F3, which is the Gretchen Flicker resume, and 4F4, which is Harvey Liederman's resume. And with that, I think we will head off into closed session.
Sorry, you need a motion.
investments. It'll be oral update by CIO Prabhu. Prabhu, can you hear us? I think you're up.
Yes, I can. Thank you, Mr. Chairman. Good morning, trustees. We have a rather lengthy agenda for investments this morning. We'll try to be as efficient as possible. All these items that are being considered by the board today have been somewhat extensively discussed at the investment committee. But before I get there, firstly, let me give some pro forma performance numbers as I always do. Fiscal year to date, the pension plan was up 6.08%, and the healthcare trust is up 5.63%. With that, I'm actually going to go on to item 2B, which is strategic asset allocation. We did tweak our language in the IPS last year to communicate to everyone that strategic asset allocation is a long-term decision. It's not something that we need to revisit every year. But having said that, I think it's always a good idea to discuss our risk levels and to see if we are at the appropriate risk level as long-term investors, and that's what we've done this year. And the capital market assumptions from Makita have already been discussed both at the IC as well as the board. And SAA itself has been discussed twice at the investment committee. And the investment committee has made a recommendation, which we will discuss today. And to discuss that further, I'm going to turn this over to Laura Weiler.
Thank you very much, Prabhu. Hello, good morning, everyone. Can you hear me okay?
Yes.
Okay, I'm going to share my screen here. Make it larger. Okay, everyone see my screen okay?
Yes.
So as your CIO mentioned, we've had some extensive discussions at the investment committee level around asset allocation. As you know, the IPS indicates that we should consider changes to the to the asset allocation generally every 3 years or so, but we do take a look at it annually as that's best practice. If we take a look in particular at the current policy, we compared that to another option, which is slightly higher risk. This was at the direction of the investment committee. So you can see that there are currently 71% of assets in growth, which includes public equity and private equity and value-added real estate and private debt, high-yield bonds as well. So these are all asset classes that are growth-oriented and have a bit more equity-like risk in them. Option 1 would have 73.5% of the portfolio in those growth assets. So if you take a look at the differences there, option 1 has an additional 1% in buyouts, which is private equity, an additional 0.5% in venture capital, and an additional 1% in private debt. So that's how we would get to the extra 2.5% there in growth assets. If you take a look at where that's coming from, it's coming from low beta, in particular cash equivalents. So as you know, there is a part of your policy that indicates that 5 years of net cash flows should be reserved for benefit payments. Taking that 13% of cash equivalents down to 10.5 would still fully provide for that policy goal. If we take a look at the next slide, this is where you see the outcome based on Makita's capital market expectations in terms of the differences between the current policy and option 1. So putting a bit more assets into growth from low beta would have a slightly higher expected return over the 20-year long-term time period, going from 8.26 to 8.46. The Vera standard deviation would go from 11% to 11.4. The direction that we received and that was discussed at the investment committee was, given that you all have had a risk sort of target or limit historically of around 12%, and we were sitting at 11% risk, we wanted to look at a slightly higher risking portfolio. And that would give the overall portfolio a higher probability of achieving the actuarial target return over the long term. We always like to look at lots of different types of analysis to see how a change in asset allocation policy might affect actual outcomes in the real world. And so you can see here that option one, as you'd expect, with slightly higher volatility, would be expected to have slightly worst case scenario returns in a crisis-like environment. However, the higher return would also have a higher probability of reaching that target rate. We look at value at risk, and again, as you would expect with a slightly higher volatility portfolio, there would be more portfolio value at risk with option one, but not a significant change. We also like to look at negative scenario analysis and positive scenario analysis historically. So all of the numbers I've shown you so far were based on Makita's and Virus's capital market expectations. Of course, we know those are not going to be exactly right, so we like to look at some other types of analysis as well, in particular how these asset classes in the portfolios actually did in different market environments historically. And so you can see the differences here. You can see that in some higher rate environments, like the taper tantrum, the rate spike in 1994, you can see that option one would do better, in part because it has less in fixed income and more in growth-like assets. But in general, again, higher volatility typically equals slightly worse performance in historical negative market scenarios. On the flip side, on the next slide, which my computer does not want to move. We have historical positive scenario analysis here. So typically the portfolios that are down the most, excuse me, in negative periods are also recovering the best. And so you'd see that option one here would have recovered the best following those negative market scenarios relative to the current policy. We also look at stress testing. A lot of folks think that Treasury rates or interest rates are sort of topped out or close to it, but we don't know for sure if that's the case. So we'd like to look at what if rates were to continue to rise. You'd see better performance in a small rate rise environment from option one. Your highest risk in the portfolio continues to be, whether you're sticking with your current policy or moving to option one, a really negative U.S. equity market environment. And then we also look at what if rates were to drop. You'd see pretty identical performance here between the current policy and option one. If we did have a really significant rate drop, we might see better performance in option one here, given the higher growth potential. We also like to look at economic regime management. This is a type of analysis that we developed because we found that the absolute level of interest rates really isn't as important as what the market expects and whether or not there are surprises. So we look at the portfolio sensitivity to growth, inflation, interest rates, and systemic risk. Systemic risk is sort of global financial crisis type environment risk. You can see that option one is a bit more exposed to growth, which also would expose it a bit more to systemic risk as well. So in conclusion, we think that your current policy is very reasonable and we don't think there's anything wrong with it. We also think it's reasonable to consider a slightly higher risk portfolio as well. So I'm happy to take any questions.
Azuar, you look like you want to talk.
Yeah. So the IC discussed this, and we think that on a long-term basis, going to option one makes sense. We have a high probability of meeting our goals. We're adding to private, 1% to buyout, 0.5% to venture, 1% to private debt. Expected returns are higher, and we think it's a strategic decision. It's not, kind of a short-term tactical move. I think going to kind of 27.5 on the private markets, we think is a good place to be. And so the IC felt that option one was a good.
Recording in progress.
Anyone else?
Question. I guess I know extensively and probably, well, because I'm not part of the IC committee, this would be a repeat of what you guys already talked about. In terms of moving more to VC, my thought is that that's a more recent program development. And I guess I haven't seen, enough of a track record there to say, oh yeah, we should go increase the allocation there at this point in time, just because based on my understanding, it's really hard to get a decent return from VC, especially if you don't get first tier, top tier type managers. And I don't know where we are in terms of manager selection. And based on the limited information I see in terms of performance, it's still hard for me to say, oh yeah, we're gonna get the expected return from VC. Probably less concerned about buyouts and private debt, but maybe you can kind of share your thoughts about our exposure to VC with the whole.
I'll first let either Prabhu or Dinesh to talk.
Yeah. Thank you, Mr. Chairman. I'll let Dinesh speak, but let me just make a couple of comments. It's a very reasonable question posed by Trustee Kwan. Yes, our track record is somewhat limited because the board's first approved VC only 5 years ago. We do have a pacing plan, and we've been very deliberate in terms of investing our dollars. As you know, Trustee Kwan, it takes a long time in private markets, be it venture or buyouts, to really know whether you've done well or not. And in some cases, especially with venture, you're talking about a dozen years or so. So I think that's something that to be kept in mind. And in terms of the actual deployment, Dinesh can speak to it, but we do have exposure to a number of top tier firms. We were successful in getting allocations. Now, these are top tier firms based on reputation, based on history and what they've done in the past. Will they continue to deliver going forward is of course anybody's guess. But it also seems to me that private markets have sold off quite a bit in the last couple of years, and that the market might pose opportunities here for us to actually take advantage of lower valuations. I'll let Dinesh add to my comments, and of course, happy to take further questions.
Yeah, I would add we have the benefit of the last 5 years. We've had a chance to establish those relationships with the venture managers, and in some cases look at their second or third fund cycles now, because they've been coming back to market, and maybe we've passed the first or second time, but now we have another go at it. We have more data, and also more doors have been opened up given the fundraising environment for venture capital and private markets overall, so we can pick and choose what we'd like to invest in. So there are plentiful opportunities. And I think more practically, the 0.5% increase actually has no impact on the upcoming year's pacing plan. So the amount of dollars doesn't change at all. In the future years, it changes just by $5 million per year. So it's really a minor change just to get to that extra 0.5%.
Thank you. Thank you.
If I could add, in terms of venture, you raised a good question. As Prabhu and Dinesh have talked about, the timelines are very long. And the other aspect is with venture, historically, the time to get in, like in many asset classes, especially in venture, is when valuations have been suppressed and decreased over the last 2 years. And the fact that you have the opportunity set of many more managers that are available, and they've studied the track records over the last 5 years, this is the opportune time. If you wait 5 years, it's too late, I think.
And I would add just, observing what the investment team is doing, I think they're being patient in deploying. I know in certain areas like real estate, we've not deployed anything because we're waiting for opportunities. So the IC was comfortable that the decision making is pretty robust in terms of what we're doing in private markets.
Anyone else?
Yeah.
I just wanted to confirm, so I understand correctly, IC is recommending to go to option 1.
Yes.
Okay. I will entertain a motion. Got a motion, Dick?
Second.
We'll give that one to Howard. Okay, we have a motion and second. Any further discussion? All those in favor?
Aye.
Aye.
Opposed? Okay. We're moving.
All right. Well, Thank you, Mr. Chairman. Thank you, trustees. Thank you, Laura. With that, we will move on to item 2C, which is the private market spacing plan. And again, this is something that has been discussed at the IC, and the IC has made a recommendation for its adoption to the full board. But to talk about further, over to Dinesh.
Thanks, Prabhu. So this is our annual pacing plan. The investment policy statement requires us to come back to the board every year to set the expectation and estimate for how much we expect to deploy into private market investments. The reason being that these are illiquid investments. We make commitments where the managers have the ability to, over the course of their 3 to 5 year investment period, find good investments and call our capital. And in the subsequent 5 to 10 years, to sell those investments after they've effectuated some value creation plans and return that capital back to us. So it's really trying to estimate how much we expect capital to be called, how much we expect to be distributed over time, so that we can consistently make investments throughout time and get vintage year diversification so that we're not overweighted toward any particular year. So this is just a guide, and it's not a certain amount that we expect to 100% deploy. There's certain reasons that we over deploy or under deploy in certain years, and real estate will be one example that we'll get into. So the pacing plan uses cash flows and net asset values to estimate out those future commitment expectations. This modeling is done by our consultants, so Neuberger Berman for the buyout asset class and Makita Investment Group for the other 4 private asset classes. We have 10 years of pacing plan results that we're going to show, although we're going to rerun this analysis year by year because there are changes in how quickly investments get made, how quickly valuations change over time. This page starts out with a summary of what we expect to complete in the current fiscal year that ends in June. We expect to make 13 private markets commitments for $267.5 million of the $329 million pacing plan. That comes in at about 81%. Half of those commitments were with existing fund manager relationships where we're investing in their newly raised funds. One of the key reasons for that undercommitment is within growth real estate, where we haven't made any commitments in almost 1.5 years. We've exercised patience, just as Trustee Menon alluded to earlier during the asset allocation discussion. It just hasn't been the environment where we had to make real estate commitments because transaction markets had been slow. Fundraising was also slow. So we could actually, 2 years later, backfill previous investments where we can watch how managers have built their portfolios over time. And it's not fully clear where the best value creation opportunities exist. So we've exercised patience and are ready to go once the opportunities present themselves. Private markets are currently at about 21.8% of plan assets, so 3.2% below the 25% target. The 25% was an increase from 19% in 2022, so we've been making progress moving towards that target. And just before this item, you've approved the increase to 27.5%, and I'll show analysis in this document of how we can get to that 27.5% target. The slowdown of the realizations have brought our allocation 1% higher than where we thought we would be in the previous year's pacing plan. So we always have an estimate over the next 10 years of where we expect our allocation to be. But because of the slowdown in realizations and transaction markets, particularly in real estate, that brought our allocation slightly higher by 1%. One note on changes in market environment, a lot of these are typical from previous years. The last one is that capital is no longer a commodity. This has been the case for probably 2 years as interest rates have started to increase. It's also impacted fundraising environments where fund managers that previously were able to raise their funds in a short time frame were oversubscribed. More people were trying to make those investments and would typically close in 6 months or less, have taken longer and longer to raise. So one of the things that we've done is being patient and making the decision, do we want to take that risk of being an early close investor or wait and see? And perhaps these fundraisers take longer, it's upwards of a year, and we can see how their fundraising status is, how their early investments in their portfolio are performing before we make the decision to invest. So this is a snapshot of our current allocation. The largest underweight is in venture capital of 2.4%. This is relative to the 25% previous target before today's change. And this was the newest asset class added in 2019, but has made progress toward the target. And the other underweight is in private real assets, which is 1.5% underweight. This was also originally an infrastructure 1% target about 7 years ago and was broadened up to real assets overall, and we've been building towards that target as well. This page shows the breakdown of where we thought we would be in the previous year's pacing plan versus where we expect to end up as of June 30th. Slightly overweight on growth real estate. If you look on the far right column, it shows the dollars difference between where the pacing plan last year thought we would be versus where we expect to be. So slightly higher, 39 million on growth real estate. Some of the other asset classes were also impacted. So buyout is also slightly higher, 29 million, and also impacted by that slowdown in transaction markets. Now getting into the nuts and bolts of the pacing plan for the current fiscal year. So the foundation is the net asset value forecast for the next 10 years. The way we come up with these is take our current valuations for the plan and layer in the actuarial assumptions for cash flows in and out of the plan, as well as the investment returns over time. What you'll find is that this year there hasn't been that much variation. So the biggest change is 5% down in the 10-year out period. So not as much variation as previous years. And I'll go to a chart that shows visually how we expect to reach our private markets target. And here I'm showing the 27.5% target that was just approved. And the way to look at this chart is that the dark colors for each of the different private asset classes represent where we expect to be as of each of those years. The bars get higher and higher over time because the plan assets are expected to grow over time. And the dark orange at the top is the proxy, where any underweighting towards the 27.5% target will be invested in a mix of Russell 3000 and Treasury bills. So what you'll find is that we'll get to within about 1% of the target in 2028. And this is just a guide and estimate of where we get there. The way that this was put together is using the modeling done by Makita and Neuberger Berman. And this page shows what those actual results are. So I'll point you to the lower left of this page, which is the pacing plan dollars based on the 27.5% target. So for each of the different asset classes, the amounts are listed for an overall private markets pacing plan budget of 395 million. And this, I'll reiterate that this is just a guide, that there are times that will go above slightly or below slightly, like in the case of growth real estate. But over time, our intention is to build a diversified portfolio and get vintage year diversification. And this item, again, was approved by the investment committee, and we're looking for board approval today. Any questions?
I have a couple. Sorry, I know we talked about this at IC. I just had a couple of follow-up questions. Dinesh, sorry, I need to email you, but I haven't had a chance. But the assumptions that we have on the NAV and the realizations, how often are they adjusted? And is there any analysis around assumptions versus, how it's tracked the reality, so to speak?
So the assumptions are changed on an annual basis, and this is one where both of our consultants do a good job of trying to reflect actual reality. And it's hard to say that some funds, they'll invest more quickly than others. So what the consultants are trying to do is look at where each of these funds are in their life cycle and make adjustments for how quickly the money should come back. So in the case of a fund that maybe has had fund extensions and in year 12 or year 15, instead of assuming that money will come back automatically at the end, try to take a more realistic approach that this will probably take a few more years beyond that. So the consultants are making that adjustment to reflect reality. And for the second point on the comparison of how it actually plays out versus the expectation, don't have this in the presentation, but we do have that on a year-by-year basis. There is variation in cases like 2021 and 22 for venture capital, for example. Money was being called more quickly during those time periods than usual, and funds were being raised more quickly because they were deploying so quickly. Instead of a 5-year fund cycle, it might have been 2 or 3 years. So there are those variations that happen in certain instances, and those are trying to be adjusted, and that's where the consultants do make adjustments to their methodologies.
Okay, that's really helpful. So it's a bottoms-up analysis, not a sort of a global assumption, it sounds like.
Right.
Okay. One other question specifically, if the environment has been, really attractive for private assets, why is our deployment lower in some of the asset classes? Real estate, obviously, it's a realization issue, and then there's still the cycle is going on. Is it is it intentional, or is just we haven't gotten allocations?
So this is intentional, and there's a few reasons why we go above and below. So first being the market environment. So real estate's that example where it doesn't make sense to make investments at this time, so we won't do that. The second is the what I would call the fundraising timelines for funds, and that's where it's actually been one of the key differences for why we've delayed certain investments. And we could have deployed more capital, and there were good investments, but some of those investments will have prolonged fundraise periods, and the incentive that's being offered to be an early close investor, take that risk of watching the fundraise play out, and maybe there's a change at the firm in the first year or two of the fundraise, or an investment that doesn't perform well. That's the risk an early investor takes. If the incentive isn't good enough, we'll delay our commitment until we can see proof that you've been successful making your fundraise, your early investments are appropriate and doing well, and then we'll make the investment. So that's been the case. There, actually, compared to the December IC when we did the deep dive of private markets, there were 2 investments that we had modeled that we expected to make in the current fiscal year that we had delayed for that specific reason. And the third is just the timing of the high quality fund managers. We try to look at the calendar, and sometimes they all raise money at the same time, and then sometimes it's more spread out. So that also leads to some lumpiness in years that we commit more or less.
Thanks.
Question about the 5-year return on capital. Is that an assumption from Newberger or Makita that's used in this exercise here? And then is that consistent with our experience in terms of the time period before the return of capital? That's question number 1. And then question number 2, before I forget it, it's about growth real estate. I think from my understanding, the pacing plan says 70 million, and we haven't deployed. We still have, I guess, capital to deploy. Is that correct?
Sure. So starting with the first question, the assumptions that are used by the consultants are actually different for each of the different asset classes of how quickly money gets returned. So for example, venture has the longest time period before money gets returned, and on the other end of the spectrum, private debt is the one that most quickly gets returned back. So each of those asset classes have different methodologies for how quickly those get returned, and there's also adjustments based on where those funds are in their life cycle. For example, this plan has certain private debt investments from 2010 that are still being invested 13, 14 years in, and those are being modeled differently based on the expectation specifically for those investments. And in one case being modeled as an evergreen fund where we don't know exactly when it'll come back. So instead of assuming it'll be year 3, we'll just assume that it'll continue to be invested for the foreseeable future. Okay, so it's kind of different assumptions but different asset classes. Correct, okay, yeah. Thank you. And then for the second question on growth real estate, there's really a few reasons that we did it. The interest rate move has impacted growth real estate tremendously. This is a asset class that relies on leverage, very interest rate sensitive. The moves in the 10-year treasury really affect the pricing that managers are able to model their investments and value their investments at. What's happened is that the market of real estate managers, there's trouble because they're using an appraisal-based valuation approach. And when transaction markets slow down because people that hold assets think their assets are worth more than what people were looking to buy those assets at, those transactions don't take place. So the appraisals for other assets can't adjust downward as a result of that. So it's been a slow process of adjusting values. And as a result of that, managers haven't been able to deploy as much capital because that bid-ask spread between what people will buy at, and people always want to get a good deal, especially in this kind of environment. And there's money being raised for distressed real estate opportunities. But in reality, there are a handful of edge cases of distressed opportunities, and mostly around sectors such as the office sector, but not as much that's actually transacting. So that's impacted the ability of managers to deploy capital. And also from our perspective, in terms of allocating capital, it's not clear where the best opportunities are to generate the best risk-adjusted returns. and we'd rather retain our capital and deploy it when it makes sense. The other point is on the fundraisers taking longer. Real estate is one in particular where fundraising has been very difficult. So managers are either delaying their fundraisers or asking for extensions and taking longer and longer. So from our seat, we want to get that timing right, and we have flexibility to make that timing decision later. So in this case, we deferred making any commitments during the fiscal year.
Maybe a suggestion to the investment committee, where there should be a subcategory called distress real estate. Just because what you just said seems like there could be a big opportunity there.
I would just add that overall, the pacing plan process is really designed to be a guide, and it can be difficult to get, exactly right in terms of dollar value. We want to use it for planning purposes, but as Dinesh described, sometimes the team commits to a fund in 1 year and they don't call capital to the next year, and things are moved forward. And then because we're locking up capital for such a long period of time, we want to be really thoughtful and, not make commitments just because there's a strategic goal to have a certain level of commitments, but make sure that they're high conviction managers. So I think your board follows best practice in terms of approving a pacing plan. But we do our best to get it to the exact number, but that's usually not going to be the case.
Yeah. Oh, another question. As a proxy,
Real quick, hold on, David. I just want to remind everybody here to please talk into your mics, because some are coming in loud and some are coming in very low, and Civic Center's asking that we're a little clearer. Go ahead.
Okay. Follow-up question. So if you don't have this invested, like growth real estate, so you invest that in a proxy of a Russell 3 and a Treasury portfolio, is that correct?
So that's at the private markets overall level. So for us within growth real estate, there is an overweight already. So the underweight is at the private markets overall level.
Thank you.
Anyone else?
I just want to say, Dinesh, thank you for the presentation and the hard work, you and your team. I think it's very thoughtful, and I do like the patience when patience is needed and activity when opportunities arise. So I think you guys done a very good job.
Thank you.
Yeah, I have to agree with that. This is a very good looking plan here. Thank you.
Okay, anyone else? And I'll entertain a motion. This is a discussion and action.
Motion to approve.
Motion to approve by
I'll second
Sunita,
that. I'll second.
second by David. Any further discussion? All those in favor?
Aye.
Opposed? Okay. Moving on to 2D.
Right. Yeah, thank you, trustees. Mr. Chairman, with your permission, I'd like to take 2D, E, and F together in terms of discussion, and I'm sure Council Chin will want you to vote separately on each of those. So this is another important agenda item. This was extensively discussed at the investment committee, and the investment committee has made very specific recommendations to the board. So my colleagues, Ron, Dinesh, and Jay will join me in this presentation. So this is regarding RFP for consulting services. As you know, we have the investment team, and I believe the boards as well, have been happy with our incumbent investment consultants, Makita and Veris. And we've been very happy with our lead consultant for both firms, Laura and her team, as well as Eileen and her team. The last time we issued an RFP was 2020. It's been 4 years. And it is always good practice to canvass and to seek and to see what's available out there. And we are a public agency. So that's another reason why I think it's good practice to periodically go out and find out what other options are available. Now, we are an investment staff-led organization in terms of investing our assets, but we do rely on our consultants, and the advice given by our consultants is very important. So we take this RFP very seriously, and we've gone through a very exhaustive process. We've discussed the investment team has internally looked at each of the RFPs very carefully and evaluated them. We also discussed the RFPs with the investment committee chairs, and then subsequently took it to the investment committee. And the IC then has made recommendations for the consideration of the full board. I'm going to first ask Ron to give us, to give the board a sense of the timelines for RFPs and when the last couple of RFPs were issued for investment consultants and the timeline for this particular RFP. And then I'm going to ask Dinesh to talk about the evaluation criteria that we used to actually assess these investment consulting firms. And then finally, Jay will wrap up with our conclusion and the recommendations to the IC and the IC's recommendations to the full board. We do want to be respectful of your time, but this is an important agenda item, and we're happy to take any and all questions that you may have. With that, I'm going to turn this over to Ron.
Good morning. So we conducted an RFP back in 2015, 2016 fiscal year. That's when Makeda was hired as a general investment consultant and Veris as a risk consultant early 2017. In 2020, we conducted another RFP, and both firms were rehired in their respective roles. Fast forward to 2022 and 23, renewed their contracts for 1-year term, and then we conducted another RFP in January of 2024 this year, and that's why we have the recommendation here. All of these RFPs were conducted based on the city's process, so we followed the open bidding, the posting into the online portal, and the entire process was followed there.
And I'll go into the methodology that we used to score the different respondents. And from each of these, we received hundreds of pages of responses. And even though about half of those were the appendixes where they had some sample reports, there was still a lot to go through. What we received was a combination of some quantitative data as well as qualitative data. And we had 8 categories that we used to score the respondents. I'll go through those, starting with the highest weighting to the lowest weighting. The first being firm capabilities, so the ability to fulfill the responsibilities that were included in the scope of services. So having the right technology and resources to be able to perform their consulting duties. I should also mention that each of these different scoring categories were done for each of the 3 different categories, so general consultant, risk consultant, and alternatives consultant. The second category was the team, so looking at the experience, the abilities, and workload of each individual, different criteria, including the professional designations like the CFA that the team possessed, the average clients per consultant, turnover among the team. Third was creativity, so looking at their ability to add value, ways like fee savings or ideas for new investments. Fourth was on completeness, so not skipping over questions. We were also curious to see if there were any ChatGPT related or ChatGPT created responses that didn't make sense, but fortunately didn't come across those. Fifth on fit, this had 2 components, philosophical and operational. So first on the philosophical side, making sure that they were in line with the investment team and board, so not having an excessive risk-taking posture, for example. Second, on operational, being able to provide the reporting that we need, as well as the data, and be able to sync up with our internal systems. Number 6, on cost, so purely looking for the cheapest option. And the last 2 are related to the San Jose RFP process, so being a local business or small business. None of the respondents in this case qualified for either of those, but those were also included. And we had a mix of different people reviewing it, so different backgrounds and perspectives, so operational, reporting, investment management, and risk. So that allowed us to all come together and look at it from a different lens. And I'll hand it over to Jay to talk about the actual scores.
Yeah, so I'll give you broadly what the results were. And as we covered at the IC in depth, our rankings for the respondents across the general and risk consultant categories were very, very close. For the general consultancy, Makeda and Veris were essentially neck and neck, with Makeda coming out slightly ahead. For risk consultant, both Makeda and Veris finished essentially tied, very similar across the categories. And for the alternatives consultant, that's where you saw one candidate kind of jump out ahead, and that's Alborn. So staff ranked Alborn as a clear winner above both Makeda and Veris. So Once staff determined what our preferences were, then it was time to sharpen the pencil a little bit on costs. And before we get into the numbers, I just wanted to give you a little bit of context around the cost, okay? So keep in mind that the plans spend currently about 1.3 million on this mix of services now. So that's what we're paying now. In terms of the plan, that's 1.4 basis points of plan. So $1.3 million, 1.4 basis points of plan. That's the total for the general consultant, risk consultant services, and alternatives consultant. To put that in context, keep in mind, you might remember this from the fee report, across the plan on any given year, we pay about 1% of plan in manager fees. So operating costs, management fees, incentives, that's about 1% of plan every year. The consultants, again, 1.4 basis points. So the proposed option, Makita for general, Veris for risk, and Allborn for alternatives would reduce that $1.3 million cost by $112,000 or 9%. So the proposed option reduces costs by 9%. And again, more context, the last time we bid this out, since the last time we bid this out, the plans are 1/3 larger, right? So the plans, the amount of money that these consultants are helping us manage, 1/3 larger than they were when they came in with that $1.3 million cost before. So, you all read the headlines too in this kind of backdrop of high and persistent inflation. A plan that's 1/3 larger than it was before, costs for this recommended set of consultants comes down by 9%. That's it.
We're happy to take any questions, Mr. Chairman.
Yes.
What was the reason for recommending Auburn? I guess we don't have Auburn right now. And I guess there's a need above and beyond what we're getting from our existing consulting services at this point to add Auburn?
I'll give you
Auburn.
Allborn, that's
Yes,
right.
sorry.
I'll give you a little history around Allborn, and then
Yeah.
Dinesh can talk to what we're looking for them kind of incrementally here from the current level of service. So it wasn't that long ago that both your plan and the federated plan had a much higher allocation to hedge funds, and Allborn served as our fiduciary alternatives consultant overseeing that large hedge fund allocation. And as you know, over the years, that large double-digit as a percentage of plan allocation to hedge funds has come down over time. Every year, we've given Dinesh a little bit more money for private markets, and that's come out of hedge funds. And so a few years back, we decided to kind of right-size our relationship with Allborn. We're paying them, as if we still had that huge hedge fund allocation. So we shrank that to about, a quarter of what their actual mandate was, in reflection, again, of this much smaller allocation. And they got to a point where they're just reporting on our existing hedge fund lineup, basically 3 or 4 funds. But now we're at a point where, again, we have this growing private markets allocation, and we're looking for firms that have expertise in those specific areas.
And I would add that it's not a need, but actually a benefit. So the way that it can benefit us is, since there's so much dispersion in private markets returns, to be able to avoid a bad investment and make a good investment, there's a big impact from doing that. So having another voice that we can look towards, and a team that is quite large and able to provide that analysis is helpful. The other point is on fees. So having another consultant that could provide access to consultant aggregation fee discounts, and in some cases these can be upwards of hundreds of thousands of dollars over the course of a fund life. So to be able to have an additional consultant that could provide access to those could more than pay for itself as well.
I mean, that's a good point. I have nothing against Auburn, so I'm just trying to get a better understanding of the history here. That's all. Thank you.
I just want to have a follow-up question on that, and then I have a comment. But is Allborn also going to help us with the venture capital piece, or is the non-VC piece of our private?
So the way it works is that all four private asset classes except for buyout would be included. So they would be able to provide venture capital ideas, for example.
I guess, I don't know if there were other questions, but I just had a comment.
Go ahead, you got the mic.
I know, just for the record, during the IC meeting, I actually had expressed some concern about the length of the renewal. I just wanted to clarify a few points, which, I know we had a lot of discussion there, and today's presentation was really clear, so I appreciate that. I have no concerns with Makita as a consultant. I just want to make sure for the record. And I appreciate that continuity is important because they have the institutional knowledge of that. I didn't want to have any sort of misunderstanding about that. And I also understand that the RFP process was very thorough. So my only concern, the residual concern, if you all remember from IC, was the term of the renewal. Even that, I'm much more comfortable today. So my vote today may differ from what I did in IC. I think one particular point that resonated with me is we have a fantastic team here. So as a plan, our reliance on the consultants is slightly different than maybe some other plans that doesn't have such a excellent investment team. So.
Good. One other question. Yeah, it just came up in terms of when I was reading the memo here. Part of cost savings that you mentioned is from eliminating BARA, I guess, from the mix. And my understanding was that, or is that BARA is used for risk analysis. I think it was used by Virus in their risk analysis on behalf of the plan. So if we don't subscribe to BARA, what's going to happen there?
Yeah, that's a great question. So part of the way, you're exactly right? The way we're achieving these cost savings is kind of a shift in priority for our total budget. I think we understand that we live in a world of scarcity. As much as we'd like to have everything we want, there are trade-offs to make, right? And so in the interest of kind of living within our means here, we made a decision to kind of shift the focus from, if you remember a few years back, there was a real focus on, I don't want to say the phrase, but it's culture of risk, right? And that's why we hired Virus as a risk consultant in the first place. But if you look at the way the plan's been allocating dollars, the capital's been increasingly moving it over to the private markets portion of the plan. Decided that that's a part of the plan that deserves to be properly resourced. And so when we looked and discussed with our risk consultant candidates about how we could maintain approximately the same level of accuracy around our risk reporting while reducing our spend a little bit, I decided that as a plan, being a direct client of BARA wasn't really cost effective anymore, right? But we still wanted to have that kind of level of analysis in our risk reports. And so we talked with Virus a little bit, and they said basically they could run similar levels of analytics. I'm going to be a little bit fuzzy in the description here because I don't want to get anyone overly detailed, but they can run similar levels of analytics on their own. So they could use their systems to kind of model our risk exposures without us being a direct client of BARA. And so we took a look at the reports and the analytics that they would be able to provide under this new model, very similar. And in fact, I would not that I could ever put anything past you all, but I would venture to guess that no one would notice the difference once we actually present the reports.
Okay, thank you.
Any other questions?
I think one comment. Is this thing on? Oh, but I just want to say, I think the team's done a great job in terms of trying to squeeze costs and negotiate with these vendors. It's not an easy job, so I think it's a great job you guys did.
Okay, seeing no other questions, we will take these items one at a time. First one is gonna be 2D, which is discussion and action to hire Makita Investment Group. So we'll entertain a motion.
I motion to approve.
Okay, we have a motion from David Kwan, a second from Dick. Any further discussion? All those in favor? Aye. Opposed? Okay, moving on to 2E, discussion and action to hire Veris.
I motion to approve.
I had a motion, David, second from Dick. Any further discussion? All those in favor? Aye. Opposed? Okay, 2F, discussion and action to hire Alborn America.
Since I'm on a roll.
I think they're really good.
Okay, we got a motion from Sunita,
I'll second.
a second from David. Any further discussion? All those in favor? Aye. Opposed? Okay. Moving on.
Mr. Chairman, can I
Yes.
just add something?
Go ahead, please.
Yes, I just want for the record to thank the IC, especially the IC chairs and then the full IC. This is a very important agenda item, and the RFP process is very important for us. And we did our due diligence, and they had very, very good questions for us that resulted in this outcome. So again, I want to thank everyone who put in so much time and effort behind this.
Thank you, Prabhu. Okay, no old business or deferred items. Moving on to new business. I'm gonna take this out of order, and I'm gonna have city council go first, and then we'll do Roberta.
Thanks, I really don't have much of a report today, other than to say we are in the middle of a budget session right now. And the budget, as I reported last meeting, is not in a good place. We're going to see possibly freezing of hiring staff and hopefully avoiding layoffs. But we will be reassigning positions while we somewhat downsize the organization. We're hoping to avoid layoffs, but we do have positions that we fund, but that are vacant. So there's not an employee actually sitting in that position doing the job, yet we fund it in hopes that we will hire someone to fill that position. So it does have an impact on our general fund in that we have to set the funds aside in case we do hire. We've taken a look at that, and last year we eliminated a lot of those positions that were allocated so that we're not holding those funds aside. We're going to do the same thing this year. That's not going to balance our budget completely. There's a lot of other things that we have to do. The city manager's budget will come out, should be coming out tomorrow, I believe. So that'll be a public document. But there are, frankly, tough times ahead. And I know you had some concerns about increasing your staffing and the mayor saying no. And the reason he did say no is that he took a look at the number of staff in the ORS, and in his opinion and his audit opinion, his team, that there was enough staff in ORS who could handle the work if it was allocated and reallocated properly. So that did come up at the last council meeting where Roberto was there. The other thing, I'll throw it out there because it may be on all of your minds. There is a discussion at council about putting a ballot measure that would change a couple of important issues as it relates to the retirement services. We are investigating that right now. We have not moved forward with anything. We won't need to move forward with language until August, but frankly, we are very concerned still about ORS as it relates to several issues. Human resources is one. All of the employees of ORS are employees of the city of San Jose, and we're still concerned that protocols are not being followed as it relates to our employees. So But we're very concerned about putting something on the ballot in that it does have a financial impact. We're estimating right now a cost of about $2 million, and we'd like to avoid that. We do have a meeting schedule, I believe, with the chairs of both boards, both the retirement, both police and fire, and federated with Councilmember Davis, myself, and the mayor. And I know Sunita and Franco, you should be on that schedule. I think it's the 13th is when we're having the meeting. And that'll be an opportunity for us to come together and collaborate and reach some sort of have a discussion, possibly leading to avoiding a ballot measure. That would be the goal, is to avoid a ballot measure. I'll just throw that out there for now.
Okay. Andrew?
Just a quick comment on what was just said. I guess I would encourage the city, I guess yourself, Councilman Davis, and the mayor at that meeting to come with concrete details behind the broad stroke things that are being stated. Unless we have a clear understanding of what your guys' concerns are, it's hard for us as a board to take action. Okay, so I hope that meeting is very productive in that sense. Thank you.
I will say that one of the number one issues is human resources and employees. And there was an investigation done, but it was a very narrow investigation on staffing issues and allegations from staffing. It did not cover certain areas that should have been covered in an audit. But the idea will be that we come together and we lay out, there are certain things I want to avoid having a public conversation with right now. But when we are able to have a public conversation, I will. Franco and I had this conversation last month that we were considering a ballot measure. We really do want to avoid that. We want to come together, but we are concerned about the operations and employees as it relates to the retirement services. So I'll leave it at that. There's a lot more to it, but I'll leave it at that.
Mr. Chairman? I guess I just have a question. I know the memo came out looking into the ballot measure, and I'm hearing from everybody that is involved that they want to avoid the ballot measure, which is good. I agree with that. I guess my question would be, why didn't we start with meetings such as the ones coming up before dropping a memo saying that they're going to go to a ballot measure? Doesn't seem like everybody tried to work things out ahead of time.
We didn't drop a memo. There's no public memo. We had conversation in closed session about it. We fought regarding the ballot measure.
I was going to say, there's a letter about the ballot measure, I believe.
There is now. There's a letter that was sent from out to the bargaining units.
Yes.
And to the chair and vice chair and the boards. Dave, I can't really answer why. We have been concerned about, Councilmember Davis and I, we're the two who come and listen to these meetings, and we read the audit, the mayor too as well. We've been concerned about lack of oversight, operation issues, lack of attention to procurement processes, the way contracts are backdated. These are all publicly listed in the audit performed by our auditor, Joe Royce, just recently public. We've been very public about our concerns, and frankly, Roberto has been very hesitant to come back to us and say, this is specifically what we're going to do. We still don't know how you're going to handle the travel policy, which was of concern to us. It keeps being kicked down the road, I'm not sure why. There's a lot of concerns, but ultimately, I'm concerned about the fiduciary responsibility of the trust of the boards in relation to the retirement funds. You just heard a great report from your investment staff. they're fabulous. They do their job really well. We're not talking about overseeing them or having any concerns about them. That's their job. You as trustees, that's your job, is to make sure that the money is handled properly. But when things like procurement is not handled properly, that affects the assets of the fund and it ultimately affects the city. So, and the health of the retirement plan for the retirees, right?
So,
I hear your frustration, and I'm not saying we're going to avoid a ballot measure. We may not be able to. I hope we can.
So the only thing I'm saying is I'm not dissuading any of your concerns or any of the city's concerns. I'm saying you guys didn't set up and try to discuss with the boards like you're doing now and setting up meetings to try to come to a resolution to see what can be done. You went nuclear and said, we're looking at a ballot measure. And I just don't understand why you wouldn't try to meet and sit down and talk to people and work things out before you go to this measures. You went to, measures with the municipal code, with the ballot measure and stuff like that, and yet all we're hearing is one side talking over here, we're concerned, one side talking over here, we're working on it, but nobody wanted to get in the room and sit down and discuss. And I don't know why that didn't happen ahead of time. It's happening now, I'll give you that. May 13th, they have a meeting. Seems like this should have happened a long time ago because you guys have expressed you've had concerns since last year. Yet we're just now getting to the point where we're gonna sit down and talk everything out. That's not the way I see things working in the real world.
Okay,
So.
I appreciate that. That doesn't mean we can't move forward together.
I'm not saying it's not too late.
I'm not either.
I'm just
I'm not
expressing
either.
my
I mean, I
concern that it should
appreciate
have
that.
happened.
I truly appreciate that. Frankly, I would have loved to have this conversation earlier as well.
Yeah.
This board had some leadership issues going on last year, as you recall. This all got muddied up with that. I'm not blaming your predecessor at all, but there were some distractions on the retirement boards. I can't speak for Federated. I'm not over there. But it's very concerning when we get first your audit report, and then we order an audit report, and it doesn't, there's some issues that are so large I can't say right now.
No, I understand that.
And I know you know.
Yes, and we're not here to discuss that part.
Right,
So
and I
just
know-
wanted to raise my opinion that
Yeah.
while I'm happy we're sitting and finally having discussions, I think they should have happened a long time ago.
Yeah,
So,
thanks. I appreciate that.
Okay, anybody else? All right, we do have time sensitive for 10:30 for the interview of members, new members. Why don't we take a 5-minute break?
Recording stopped.
convene here.
Recording in progress.
Just a couple of things on process. One thing I want to bring up is there were 3 candidates that put in for this board position. Unfortunately, one of them is on a plane, which makes it pretty much impossible to even zoom in. That creates something that this board probably needs to discuss. If we have the interviews for the 2 candidates today, which they're here, we will, and that is a matter of public record, and we defer this to have the conversation next month with the other candidate, I do believe there's an unfair advantage to that, because he could review it, he could prepare for questions, and would have a month to do so. Yes. Who's this?
I'm listening to the.
Thank you. Thank you.
So the other problem that I see with that would be that it's going to delay this process a few more months, where this board could make a decision on something and end up 4-4. So I want to bring that out for discussion for the board and kind of get your opinion on how you think we should proceed.
Mr. Chair?
Go ahead, Dave.
I think you've kind of explained it perfectly. If we allow the third interview to interview at a later date, they get the unfair advantage of being able to have 30 days to prepare after hearing their competition's answers to the questions. So I don't like that at all. Then you have the other side of it where you could delay the process, but to your point, we'd end up with 4-4 and not move forward with the vacant seat. And it would also be unfair to the 2 candidates who did make time today to show up. Therefore, the only thing I can actually see moving forward that is actually fair is because the third candidate couldn't make it, they are no longer considered, and we move forward with the possibility of one of these final 2. That's open for discussion, but that's just kind of how I see it playing out.
Okay. Any other comments?
I would agree with Dave. I think, if the third candidate was interested, he probably should have made time. That would be the way I would think about it.
Dick? Don't, yeah, it's green.
Everybody's got all kinds of stuff going on. I want to go forward.
Okay.
One comment, council, are there any issues with people who apply and then are denied an opportunity to do an interview or something?
No, there's no due process necessarily because there's no vested interest in the position. They're just a candidate, just as any other job candidate would be.
Okay, thank you.
As a point of order, does this require any kind of motion that we continue going, or we just move forward?
So I don't know if you necessarily need a motion for this. We have 2 candidates that we have forward. If you so decide at the end to vote to nominate one of those to move forward to the city council, that is what's agendized before you for action. So regardless if the other candidates here or not, the action that's being requested is that you nominate someone to city council for approval.
Okay, and I think just in the interest of process, it sounds like we'll doing this through consensus that we just go forward with the 2 candidates.
Yeah.
Also, on a piggyback, to keep things fair, I believe, and I think Harvey may have already discussed it with Gretchen, that they will step out while the other one interviews. So there's no, I'll say, intel gathering, even though it'd be a lot shorter than a month. So any other comments on the process? Questions? Okay, hearing none. Harvey, can I have you step out? We'll start with Gretchen.
And if I may, Mr. Chairman, I think we should also step out when the board is deliberating.
Yes.
As a matter of courtesy to the board.
Yes.
Thank you.
Thank you. Good morning, thanks for making it.
Good morning, thank you. Can you, am I close enough?
Yeah, just ask that you talk into the mic because these are recorded.
Yes.
We'll start it off by letting you introduce yourself to us.
Thank you. So I am Gretchen Flicker. I'm a retired financial services executive who's been spending my last couple of years keeping busy by trying to use my expertise to give back. I spent 25 years in financial services, most of that with one of your managers, Dimensional Fund Advisors, who I retired from in 2019. I was part of the institutional team. I did sales, I did relationship management, and my final role there was building their sub-advisory business.
Great. Thank you. I guess I'll ask the first question to get it started, or get the conversation started. Why the Police and Fire Board in the city of San Jose for retirement?
Sure. So as I've been trying to figure out, we'll say, how to fill my time and what will give me some purpose, I met with a former trustee here, Gia, who introduced me to the idea of serving on the retirement board as a way of using my skills and, as I say, continuing to give back and work on something that I feel is very important for society. Up until now, my work has been focused more around education, particularly women's education, and increasing the number of women in finance. But this is another area that is incredibly important to our society, to make sure that we are providing for our first responders, those who have been serving our community to date and those who are going to be serving in the future. Pension plans are a shrinking part of, unfortunately, the retirement world across the board, particularly in the corporate space. So making sure that they are sustainable in the public sphere, I feel, is incredibly important. And I think I have some great skills to help move that forward.
Thank you. I'll open up to other board members to ask questions. Andrew?
Good morning. Reading through your application and your resume, you have a variety of experience, and you alluded to working with pension systems. Can you highlight and talk about about that experience is and how were you involved or exposed to the pension systems?
Yes. So I will say most of my clients were corporate pension plans. So a few that would let me name them. I worked with, say, AT&T, Bell South back when they existed, Sandia National Labs, but a number of plans. I also did work indirectly usually indirectly on a few public plans, helping out with other RDs. So I worked with the city of Milwaukee from time to time, St. Paul teachers. Typically, my role was working with them on specific aspects of what Dimensional was providing as an investment manager. But there was a lot of time spent understanding how we fit into overall portfolios, what we brought to the table in terms of their overall goals, whether that be from a return perspective, a risk reduction. One of my favorites was always working with a plan who had us in a number of investments, but also worked with us to pre-fund their pension liabilities. And so typically, as an investment manager, you're like, oh, great, money's coming in, and then you see it going out over the next couple months. But working with them and with our internal team to understand that this was actually a benefit for the plan and for us as we help them stabilize how they saw their assets going out, and making sure that they didn't have to sell out of more volatile portfolios at inopportune times.
Dave?
Yeah, obviously applying for a position on the Board of Trustees for the Police and Fire Pension Board. had a chance to go through a little bit of your resume. Sorry, it's a little last minute for me. But would you mind speaking to what your knowledge is about our pension fund and things that you've learned about us in this process?
Sure. So I have, we'll say top-level basics, about $5 billion, including the pension and the healthcare trust. I believe 80% funded was the last number I read, which is a little bit above sort of national averages, which recent Milliman report was about 78%. So those are positives. I've read through the statement of investment policy, which seems to be very well thought out, very strategic in how it's put together with the different risk buckets. And I have a lot to learn. I've read a lot of policies, I've read a lot of the procedures, but say the big thing that I came out of everything with is I think I do have expertise to offer. I would not want to offer suggestions at this point in time because I also know suggestions need to have appropriate institutional knowledge and background that I do not have at this point in time. That would be a big learning curve for me, but willing to put in the time on that.
All right, thank you.
Sure. So first of all, welcome as a fellow booth fellow. I want to ask, I think you were here during the earlier discussion.
Yes.
And there are different dynamics. Can you talk about how, in your position as a trustee, you would balance, the different stakeholders, the city, for example, the
Yep.
plan, fellow trustees, those kinds of issues?
Absolutely. I'll say I have a fair amount of experience doing that from my career of balancing the needs of clients and the needs of the company I worked for as you negotiate contracts and dealing with compliance and legal concerns. But more recently, serving as chair of the board for my alma mater in Indiana, where we also had various stakeholders from the administration to the faculty and staff to the students to the alumni and other people who gave to the college. And every role is really learning how to balance those dynamics and needs, being able to listen to the views of all sides and have a respectful dialogue with hopefully an outcome when everyone can sit down in the same room and have that dialogue. You can come up with better solutions when you're taking everyone's views into account than when you're coming in with a preconceived notion of this is the way it is supposed to be. So that's generally my view, is that that you will always come out with a better solution when you're working together rather than talking at each other. So it's the listening and communication piece that is key to that process.
Thank you.
I had a question. Gretchen, welcome. I also know Gia, so that's great that you know Gia. You mentioned your experiences both in financial services as well as in St. Mary's. Given your past experience, your current experience with nonprofits or plans, what's been the most positive set of experiences you've had there, and what have been most the challenging ones, if you can have any examples?
The most positive and the most challenging probably go hand in hand a lot of the time. Because when you have the most challenging, when you come to resolution on it, it feels like a big win. I'll give two examples, one from my career and one from my nonprofit side of things. As I said earlier, one of the last things I did at Dimensional was start up their sub-advisory team. And one of my last big wins was launching the first sub-advised ETFs. Now, you all, I'm sure, know that Dimensional these days has a lot of ETFs. When I left, the only ones they had were the ones that they were sub-advising for one of the relationships that I managed. going through that process of launching the first ETS for Dimensional and for this client, which was John Hancock, was an incredible task of educating people on the risks and benefits, and going through the day-to-day and learning and doing on the spot. And it was a challenge from day one to get people on board, but ultimately was a great success and led to wonderful advancements for Dimensional after I left. The other example I'll give of challenge and success is while I was chair at St. Mary's. In late 2019, actually early 2019, we started a search for a new president of the college. We announced our new president of the college in February of 2020. I'm sure everyone can see where this is going. I had a vision for what being board chair was going to be like. I had a plan. We were going to bring on a new president. We were going to onboard her. We were going to write a strategic plan, and then I was going to be out. So we announced in February of 2020, and then COVID hit. The students went home. We figured out how to onboard a new president remotely. We figured out how to bring the students back to campus in the fall. Thank God for being a small campus, and get through that process. Oh, and I'll add, our new president's first day was June 1st of 2020, shortly after the George Floyd incident, which created a fair amount of unrest amongst certain groups of students that we as a board and a brand new president had to respond to. I won't say any of that was easy, but ultimately as an organization, we came out of it stronger. So the two go hand in hand for me. Those challenges were ways for the organization to grow and become better.
Great, well, thank you.
Nice to meet you, Gretchen.
Nice to meet you.
Wonderful to see another senior woman in the investment industry, so a few of us. Clearly you have vast investment experience, and that's a big part of what we do.
Yes.
At the board and overseeing the investment. But there's also the other side of it, which is, risk, governance, audit, et cetera, and sort of the operational elements of it.
Yes.
Could you perhaps point to some experience of yours that might be relevant to this, or how you might approach it?
Sure. So while my career was on the sales and service side of things, as a sub-advisory expert, a lot of my role was also on legal and compliance, which brings the risk part into it. I will say I spent a good amount of time working on regulatory documents, compliance reviews, and that sort of thing. So I do have a good sense of, at least from a mutual fund side of things, how the risk in operations and compliance and legal and all that not as fun behind the scenes stuff goes, and a great handle on that. Governance, in my view, is probably one of my specialties. On the St. Mary's side, I was board treasurer for 3 years. So I worked with our finance and budget team. I worked with the audit team and audit committee around all of working through the audit, working through the operations. And I'll also say during my time as chair was when our audit committee began the process of creating an enterprise risk management system. So on all of those topics, on ERM and such, I would say I probably know just enough to be dangerous. I know some great keywords, but I wasn't the one digging in and getting everything done. But I do enjoy learning about all of that, and I am more than ready to dig in and become more knowledgeable, and not just enough knowledge to be dangerous.
Thank you.
Hi, Gretchen, and welcome.
Thank you.
We have various committees, from governance to you name it.
Yep.
But we have a disability committee. Do you have any knowledge in disabilities, and would you be willing to serve on that committee?
I would be willing to serve wherever the board thinks I am most useful and helpful. I do not have a lot of experience, well, really, I won't say I have experience with disability. I did, as I'd gone through the committees preparing for this, notice the disability committee was there. Couldn't find a whole lot of information about it, so I called up a friend in Los Angeles who was an LA city attorney and sat on Lacers and asked her, so what is the disability committee? What does it do? I did notice as well it had a vacant seat. And so she gave me the lowdown on the disability committee, and I think one of the things that I really took away from that conversation was, again, if you're serving on that committee, the need to listen, to read, to pay attention to the facts, and to have empathy are the big parts. And I think all of those are things I can and am willing to do.
Thank you.
Welcome, Gretchen.
Thank you.
I'm not a Booth graduate, so I don't have that similarity with you. I have a two-part question. The first part is part of a prepared list of questions I have in front of me. Kind of know probably the answers to this, but I'd like to start off with this anyway. Do you think you can exercise independent and unbiased judgment, not influenced by the interests of others outside the board, even in politically difficult situations? So that's part one. And then the second part of that is I think we all come in here with certain priors and biases, and I think I do too. And it's all based on our background and experiences that we've had. Now, how would you try to mitigate your biases in serving as a trustee? So, two parts. Thank you.
So, part one, the answer is yes. I think as a fiduciary for whatever board you sit on, you are responsible for making decisions in the best interests of the constituents. That is first and foremost. And so, yes, I believe I am able to do that. And I do think that leads to the second part of the question, being able to understand what your own biases are and take that into account when making decisions. I come from a technical background, but I also understand there are purposes and places for different kind of investments than what I did as a career, than what I'm, personally investing some of my money in now. And so, yes, I have my own biases, but I think I'm well aware of what those are. And I can take a step back and listen with an open mind to really understand what is being presented and evaluate it on a fair playing field.
Thank you.
Just sort of on the same vein.
Yeah.
Can you give us an example or two where you were dissenting view on a board seat?
Let's see, where can I give a public example of a
That's
dissenting
fair.
view?
Or maybe you can talk about it more generally. Perhaps that's too specific a question.
Yep.
How
Yep.
would you deal with when you have a different view from the rest of the board?
First of all, it comes down to starting with a place of respect and being able to, we'll say, have a conversation and not yell. And frankly, I think it's important to have dissenting opinions, to have people of different opinions when you're having a discussion when you're making important decisions, whether it be about hiring a consultant, hiring or firing an investment manager, making change to an operational system. We risk groupthink if we don't have any dissenting views. And so being able to come in with tough questions, heck, even if you agree, being able to come in with tough questions, play devil's advocate can be really important in moving the discussion forward and getting the right answer for the organization and its constituents.
Thank you.
Okay. Anybody else have any questions?
If the trustees don't have a question, they do just have a couple questions for the candidate. One of the things that you've mentioned, you have your own personal investments. As a trustee, you're required to file a disclosure document on an annual basis called the Form 700 that requires you to report your investments, your business, source of income, real estate interests, and any gifts as defined under the FPPC, which is a state agency. Are you willing to complete and file yearly the full disclosure of these items?
Yes.
And one of the other things too is that in the course of being a trustee, you do get a number of confidential information that's provided to you, including in investments as well as in benefit administration issues. Do you understand that while you be privy to some of this confidential information, by virtue of taking the position that you are prohibited from using that information for your personal gain or any other non-city business?
Yes.
And lastly, under the city charter 204 and the city policy 1.2.1 regarding code of ethics, Trustee Kwan mentioned this a little bit. The city officers, including the trustees of the board, must be independent, impartial, responsible in the performance of their duties, and accountable to the public. That means you, as a potential trustee, are prohibited from participating in making, attempting to make in any way use of your position as a trustee to influence a city decision where you know or have reason to know that you have a financial interest in the matter. Do you understand that?
Yes.
Okay, and the follow-up question is, to your knowledge, do you have any financial interest in the operations of the administration for the police and fire pension plan?
No.
Okay, and I just wanted to make sure that we've cleared that hurdle before we go forward. And the same question with ORS. The Office of Retirement Services.
Yeah, no financial interests.
Okay, thank you.
Yes, go ahead.
In terms of time commitment, obviously, we don't get paid nothing significant, right? But what is your sense of, how much time you think you would be able to commit, and what do you think is required of trustees?
Well, from what I see, the research I've done, approximately monthly meetings plus the meetings for committees, which depending on the committee, it looks like it's monthly or a little bit less. And then there is the reading and prep time. So I'm guessing it's, a decent amount of time in preparation for meetings and committee work. At this point in time, being retired, I have the ability to do that. I will say full disclosure, we are going to be out of the country for 6 weeks in the fall as we walk the Camino. That's the only time that I don't have time. But other than that, as a retired person, the time commitment is not an issue for me.
Thank you.
And I look forward to filling up more of my time.
I just had a question, maybe it's for you or for council. So this position is interviews with the board, and the board recommends to the city council. But are the duties any different in terms of what the board member needs to do?
No. So essentially, this position, we interview the candidate, we provide our recommendations to the city council. The city council then would have to approve the placement of this trustee on the board. Once the trustee sits on the board amongst all the rest of you, they have the same fiduciary duties as every single other trustee on the board. But the process to get to the seat is a little different from the other trustee positions.
So just to clarify, so they're not considered the liaison or anything like that?
No.
Okay, it's just the hiring process that's different. Okay.
Can I add something about the process? The name that you put forward will likely be interviewed also at a city council meeting.
Right.
It's not a consent item. It's typically something that we bring the applicant in and interview them.
Right, just like, I mean, we all interviewed with you. I just
That's
was-
right, yeah.
Okay, I don't think we have any more questions. Thank you for your time,
Thank you.
and
Well,
I guess we'll be in touch after
Very
the board
good.
discusses it.
And I will send Harvey in.
Great, thank you.
Thank you, Gretchen.
Thank you.
So, just for the record, that was about, looks like between 28 and 30 minutes. Yeah, I got it, thanks.
Good morning.
Morning.
Are these live?
Yes.
Am I?
I don't know, check your pulse.
It's unusual not being on Zoom.
So Harvey, how's retirement?
Say again.
How's the retirement?
Two things. One, it is a delight after 51 years of law practice to stop writing down every 10th hour of my time and billing it to clients. That's a real treat. But the other thing is that I suddenly find after so many years of practicing that instead of paying attention to your business, I'm paying attention to myself, my physical being, my health. I go to doctors, things that I haven't scheduled because too busy to do. So it's okay, but I miss you guys.
Of course.
I miss you all.
Okay, we'll kick this off. Not that everybody doesn't know, but can you give everybody a brief summary of your experience?
I will do that. Thank you. And thank you for the
Tell us about
opportunity.
yourself. How about that?
What's that?
Tell us about yourself.
Tell about myself. I don't usually talk about myself, so forgive me if I hesitate a little bit. But I do have one very important comment I want to make first, and this is for Councilmember Foley. Happy birthday. I think it was yesterday, wasn't it? That's the other thing I've learned in retirement is that birthdays are important. So happy birthday. Hope you had a great day. My career has taken me to every aspect of public employee pension funds, both here in California and across the country. And I think, like I say, I don't like to talk about myself so much, but I think I've earned a reputation in this business. And I think that reputation serves me well to assist this board and to be a collaborative member with the board because I really do care about this system. And over time, I mean, I've spent a dozen years. Some of my clients, my longest serving client was for Orange County Retirement System. And I was with them for 29 years. Most of the clients that I've served, most of the relationships that I've had have been decades long. And I've become very close to a lot of the funds. I also had a career before, as I put in my application, even before I got into public employee pension funds, of financial services business, particularly with distressed companies and bankruptcy cases and credits, creditor rights and that sort of thing. So I bring a financial background to my pension fund experience. And I sit here today because I want you to know that I really care about this fund. You can't work with people like yourselves for a dozen plus years for the kind of people that you represent, that the people who you serve, the people that we all serve. I've served with you as a fiduciary. You can't help but care about their lives and their futures as well as you all do. And I think, humbly, that I can add value to where this board, where we all need to go from here. And I'd like to have that opportunity if you will allow me to do that. I'd like the opportunity to try to bring some value to how we collaborate together as peers, how we collaborate and operate transparently and effectively with the plan members, our primary charge, and how we collaborate with our plan sponsor. Quite honestly, I think the fabric of that collaboration has been stressed over the last year or so, maybe 2 years. My message in that regard would be, based on my experience, the administration of a public employee pension fund should not be controversial. It shouldn't be remarkable. We sit here as a board with the obligation and the responsibility to prudently steward the fund and to administer the fund and choose those who administer the fund on our behalf to do their job, to have processes in place, to work together, to roll up their sleeves, and to get the business of the plan done. And this board's obligation is to oversee that, direct that, and make sure that happens. As I say, it should not be remarkable. A public pension fund, in order to timely deliver benefits to its members, needs to be a well-oiled machine with processes in place, and the board needs to direct that to happen. I'd like to think that I could help add value in that regard as a co-equal member of this board. I think board governance at this stage in the history of this fund is important from a risk mitigation point of view. Makita will sit here, and please forgive me, Franco, if I'm going on too long. I'm just trying to put a few preliminary thoughts in, and I obviously welcome questions. But my comment is, Makita comes and talks to you about risk and return. And when you talk about the asset allocation, you talk about compensated risk. In other words, you say, well, we'll take a little more private equity or private credit risk. The volatility will be higher, but we expect to earn more, several basis points more. I've spoken with you many times about compensated and uncompensated risk. That's compensated risk. That's market risk. You have Veris, you got Makita, maybe you have Barra or not. I don't know. I walked in the middle of that conversation. That's compensated risk. One of the things that we need to do as board members is to bleed the uncompensated risk out of the system. Uncompensated risk means just that. There are risks that go bump in the night that you will never get paid for more. They're not market risks. They're things like compliance risks, compliance issues for your managers. Are they sticking to their style? Are they sticking to what you hired them for? Or are they drifting to make the bogey that they need to make? There's cyber risks. There's administrative risks. And it poses not only to the plan, but the plan sponsor. One of the best things that we can do is focus on these uncompensated risks, the things that will only detract from your expected return. It will never add to your expected return. And I think I can add value in that regard. I'm going to be really honest here. In the history of this plan, as I've known it over the last decade plus, I think you have great investment expertise already on board, on this board and at staff level. I think what we need going forward is a jolt to good governance. And I'd like to think, because I've had enormous experience helping onboard C-suite officers of pension funds all over the country, state funds, county funds, city funds, that I think I could work very collaboratively with this board, the rest of the board members, to get us straightened out right now and to get us on a good operating footing. And so I'm motivated to be a strong collaborator with everybody else on this board. And Franco, why don't I just take whatever questions that you may have that are on your mind. I will be as open and honest as I possibly can.
Thank you, Harvey. I appreciate it. Obviously, with your experience on this board, the questions are, a little different. But you've already answered my second question, which is why you want to be on this board, so we now know that. But I do have an important question for you.
Yeah.
As former counsel to this board, how would you handle a conflict if you had a disagreement with our current counsel?
Again, we always disagree, at least while we were practicing, and we work those things out. No, my role as a board member, very different from being legal counsel. My role as board member is to listen, question and probe, and then collaborate with everybody here. Because we are the way this trusteeship is established, no one person makes any decisions. We have to make decisions together. And so I would be one of you. If we had a disagreement, that's going to happen. A lot of things come up all the time. But I wouldn't necessarily call them disagreements. Different perspectives, different weighing, different options, different things come up. I would listen, I would question, I would suggest. I would work openly if we can do it in open session or in our closed sessions as necessary with all of you. I wouldn't hesitate to speak my mind, but I do respect our outside consultants and counsel. They are your counsel, consultants, Makita, the actuary, Chiron, counsel. You hire them collectively, you evaluate them collectively, and I would be part of that collective.
Yeah, thank you. I will turn it over to other trustees to ask questions. Andrew?
Good morning, Harvey. Sort of in line with Franco's question in regards to how you handle conflict with counsel. We will be doing, not sure the timing around it, but we'll be doing an RFP for general and fiduciary counsel in the future.
Mm-hmm.
How would you handle that situation as a trustee if Reed Smith is one of the applicants?
One of the fundamental tenets that I bring to this table is that we need to trust each other as board members. If I felt that my judgment in engaging in the RFP process and interviewing counsel and selecting counsel with everybody else, if I felt in any way that I could not be fair and equitable in that process, I would recuse myself. More importantly, if I felt or anyone expressed that any of you were uncomfortable with me in that position. Out of respect and trust for you, and because it's important that we share that trust around the dais, I would recuse myself from that or limit my participation. Because your trust in me and vice versa is every bit as important to me as a board member as the selection ultimately that we might make. So I hope that answers the question. I can't speculate right now, but I will tell you that just as you know, when we have on the agenda, you've got active or members and retiree members. And so I expect the active employees or retiree former employees to be as fair in considering your colleagues as I would be fair in considering others for engagement as counsel. So I have that expectation of you. You should have that same expectation of me.
Thank you.
Always a pleasure to see you and hear your sage-like voice. So nice to see you here. I mean, obviously, there's, as Franco said, none of these. I mean, we all know that you have the expertise to be in this board. It's a question of, getting comfortable with the other factors, as you said, the uncompensated risks. Can you give us some of your perspective? You've been through Measure G and the authority that was granted to the boards, and today we're in a contentious place, so to speak. I'm not evaluating why we're there, but what is it that, in your opinion, if anything, we could have done differently to not be in the place we are today, and not risk any of what is being granted through Measure G in terms of delegation?
Measure G implemented some charter changes, and then actually there's provisions in the Muni Code that were left over, like appendixes, and never fixed to be consistent with Measure G. Like the role of the city manager, it's still sitting in the Muni Code. The health care, the doctor panels that we were supposed to have never got written into the Muni Code. But I mention that because Measure G was part of our plan document. And it was political, and there were negotiations that took place. And we ended up in a certain place, which was good, with the plan sponsor. And the plan sponsor recognized that it was important for the board to exercise independence over who they delegate their responsibility. Remember, the board's got the responsibility under law to manage the system. The board has to delegate that. You're going to meet once a month, or committees are going to meet once a quarter. But on a day-to-day basis, you have to delegate your responsibility to somebody to carry it out. That's ORS. And the board needed some authority over who that was and who was carrying out the board's responsibility. I think we're in the place where we are now because too many people followed a policy of ready, fire, aim, instead of kind of what Dave Wilson was suggesting a little bit earlier, like, can't we sit down and have a collaborative conversation about this and understand what the pressure points are and talk through what it is? Because in my experience, and I've worked with 36 public pension funds nationally, state, local, city, otherwise. These things come and go in cycles, these stresses, these management issues. And every different system addresses it differently. It's one of the reasons why I gave, in the application, I gave 2 references, asked for 2 references. And I very carefully selected those references to try to highlight something that my message to you. The first reference was Roberta Spoon, who is a long-serving mayor-appointed member of the San Diego City retirement system. The mayor appointed Ms. Spoon many years ago, has a lot of trust as an appointee in her. And over the years in my relationship with her, she's come to expect a certain level of understanding and respect that I have, not only for the plan itself in San Diego, which is a charter city just like San Jose, but also for the issues that arise with the plan sponsor through the mayor's office and otherwise, and how accessible that I've been to them in working through issues. She was one. My other reference is Adele Tangaloa, who is a labor representative on the Orange County Retirement Board and brings the labor perspective, but is also the first woman of color to sit on that board, and that is remarkable if you know Orange County, quite frankly. And that was a great success, and I've mentored her for several years, but brings the labor perspective. Both of them readily agreed. When I called them, I said, I'd like to include you as a reference, and both of them readily agreed. And because they understand that what I can bring to the board is to bridge these gaps and spark a conversation. We did this, forgive me if I'm digressing, but remember a year and a half ago when we had the big issue with the SADRO, and we had retirees who had been divorced, and there was an interpretation of the Muni Code, our plan, that would cause the member to forfeit their disability benefit and get taxed. Before that, and we fixed that, we headed that off. But before we did that, before we came up with, we thought, the proper interpretation of that law, that's part of our plan, I went to the city attorney's office and asked them, how do you interpret this? Is this the proper interpretation? Do you see it differently? Can we walk through it? Can we talk about it? And that was accomplished in rapid speed, effectively, and there were a lot of worried retirees out there who were reassured very quickly. But we did that through a collaborative working arrangement. Measure G, there are so many systems. In Los Angeles, for example, Los Angeles City, another charter city, the board picks the CEO, but the CEO then has to be confirmed by the city council. Kind of like this position, in a way, where you make a recommendation and then it gets confirmed. Other systems have a completely different. The board, as we have in Measure G, the board selects the CEO to whom it's going to delegate its responsibility, because that CEO has to be a fiduciary. Can't just be a city employee. The board is legally bound not to delegate any of its duties to somebody who's not a fiduciary. That's why all of our investment managers have to sign on as California fiduciaries, because you're not allowed to delegate to anybody who's not a sworn fiduciary to the system. So there's a spectrum across the board of how these things can be configured, and it doesn't have to be Measure G, it can be something else, but it's something to walk through, because clearly there's an issue that needs to be addressed. And that issue can be addressed cooperatively and collaboratively, Or as we had to do in some other systems, the whole panoply of other ways of resolving disputes and misunderstandings to and including legislation or litigation. All those arrows are in the quiver. Hopefully you don't need to use them. So Measure G is one configuration. It served the board well, I believe. But that doesn't mean there aren't things we can do to fix it.
Thank you.
So Harvey, welcome.
Yeah.
And so you bring a lot of experience in dealing with other such systems. And as you look at best practices in other systems, and I was going to ask you about 1, 2, or 3 most important things we should do. And you talked about one, which is uncompensated risk.
Mm-hmm.
Are there a couple of other things that maybe San Jose could do based on what you see in other systems?
I very seldom have seen in other systems, both at the local and state level, a degree of internal contention that has marked the administration of this plan within the last year or so. That needs to be fixed. Honestly, that's an easy fix, because just as you have an investment policy statement that is the skeletal charter of how this plan will invest in the markets and who's going to be responsible and what are the processes and how do we go about it and who has what authority and accountability. On the benefit administration side and the rest of the administration of the system, whether it's benefits or disabilities or anything else, we kind of need an investment policy statement look-alike. And I know the board's working on that right now. These are not things that can't be fixed. Other systems have addressed them, but honestly, from time to time, I've been asked to go into other systems and excuse CEOs, excuse chief counsels, because of the internal dysfunction. What this board doesn't need is internal dysfunction. What the plan sponsor doesn't need is internal dysfunction. And it shouldn't be there. Again, that's one of those uncompensated risks. That just detracts from your effectiveness. That can be, this board can bleed that out of the system. I know you're working on that now. I haven't followed the details of all the policies that are being considered with Cortex right now. But that's the kind of thing we can look to other systems for. We did, in fact, I mean, I gave Cortex the Orange County procurement policy to compare with the city's procurement policy and say, are there gaps, are there things that we can do or not do? This is just, honestly, folks, this is roll up your sleeves and get the job done kind of work and write the course of the ship. We can do that, come on. They have so much talent on this board. We have so much talent at the staff level. We can get this done. And we can take those pages from other systems, sure, because others have had to deal with them as well.
Anyone else have something for Harvey?
Hi, Harvey. Nice to see you again.
Good to see you, David.
Kind of a follow-up. Yes, thank you for highlighting all the uncompensated risks that we're exposed to. I was trying to get a better sense of anything else that you've had the opportunity to think about since you went into retirement. that
I've only been retired up. 2 months.
Yeah, well, that's still, I think, long enough.
But I think a lot.
Yeah, that you want to highlight to us. And what would be a proposed solution in terms of, I know this is using your word, straightening out whatever the uncompensated risk is, beyond, above and beyond what you just discussed?
David, that's just sort of, I think I've probably exhausted the topic in terms of focusing on processes. If we put good processes in place, then the board simply needs to monitor and hold people accountable. And we can do that. We have to get back to being a board at the board level, and expect that others are going to take care of the details. But I think that's a key goal for this board, at least for the next year, is to regain the reputation that the board has had for excellence, to reopen dialogue and communication with our members and our plan sponsors. I will tell you that when I come here and ask you to consider me to be one of you as a board member, it's also with the pledge that I intend to be open and transparent and accessible to all the members of the system and to the plan sponsor as well, because I think that's critical. But I will make myself available and accessible to help promote these things that I'm talking about. So it's not just, I'm not just doing a slideshow presentation on good governance. I'd like to be a catalyst to work with everybody here in bringing about that good governance. And I think, quite frankly, that I could bring some value in that regard.
Thank you.
Hi, Harvey.
Howard.
Good to see you again.
Pleasure.
I loved hearing your wisdom about what you've learned. It just comes through in terms of collaboration, in terms of what it means to be a good board member, and the separation between you as a board member and council and outside service providers. So you've been through a lot of interesting experiences, including City of San Diego and Orange County. Were there any things in the past that you would have done differently in your work there that, looking back, you might have said, oh, maybe I should have done this or I should have done that?
Oh. Well, as council, you kind of work by assignment. And so I've always been very respectful of the fact that this is the board and I'm your outside advisor. Of course, that's changing now. I won't be your outside advisor. But the opportunities that I've had to initiate actions have been very narrow. Not so much, nothing comes to mind right now in terms of other systems that I wish I would have done differently. I don't want to go into great detail about confidential matters that have taken place with this board over the last year. But I will say that I think I blew the whistle on rogue behavior pretty early on, but probably not early enough. And I don't want to get into greater detail than that, but when you have, whether it's board or staff, engaging in cowboy behavior, I'll call it, where it's not authorized by the board or part of board conversations or deliberations or policies, but going out to the world and mau-mauing things, that so distracts from the ability of the board to govern itself. And I think I blew the whistle pretty early, but in retrospect, I wish I had blown it earlier than I did. Because I think this board, the rest of you, got dragged through some very unfortunate periods that should never have happened. I'm trying to be as open and honest with you as I possibly can. So, I mean, that you make judgment calls all the time, and you have to take into account who the people are, what the surrounding pressures are, what the surrounding issues are, what the politics are. This is not a political body. So when we're thrust into a political realm, it should be very uncomfortable for all of us. The board is here to administer a plan that was created by the city, bargained for with its members, delivered to us in a package. It's our job not to try to change the policies of that, but to administer that as best we can. And when things, when board members or others, in my word, go rogue, it really detracts from the work of the board and the reputation of the board. So hopefully we can avoid that in the future.
Thanks, Harvey.
Thank you. Wait a minute, nobody said that Maytag gets to ask a question.
I just have a couple questions, just because we asked the other candidate these questions as well. So out of fairness, we were going to ask the same questions, which are, trustees are required to file a disclosure document called Form 700 that reports the investments, business, and source of income, real estate, interest, and any gifts that you receive under the FPPC rules. Are you willing to complete and file this form yearly for full disclosure of these documents?
Absolutely. I've done that for the last 20 plus, ever since they passed the Form 700. I think I do that regularly, and I've had to do the leaving office form, so now I would have to do the coming on to an office form. But yeah, that's not a problem.
Okay, and then do you understand that you may be privy to some confidential information by virtue of taking the position, and that you're prohibited from using that confidential information for any personal gain or any non-city business-related reasons?
Absolutely.
And the city charter, section 204, and the city policy, section 1.2.1 regarding code of ethics provides that the city officers, including the trustees on boards, must be independent, impartial, and responsible in the performance of their duties and accountable to the public. That means you, as a potential trustee, are prohibited from making, participating in making, or attempting to make in any way use of your position as a trustee to influence a city decision where you know or have reason to know that you have a financial interest in the matter. Do you have any financial interest in the operations of the administration of the Police and Fire Pension Plan, or ORS?
No, none whatsoever. And of course, for all the years that I've been here, I've had to operate under the same admonition as well. And like I say, if at any time, we all owe it to each other, if at any time any of us discovers that we have a financial interest that could be affected by something the board is doing, we have to step forward and disclose that and recuse ourselves as appropriate. But you know, that goes without saying, absolutely.
I have a question. Are you still a partner at Reed Smith?
Oh, no.
Okay, so you have no financial interest.
I have no ties to Reed Smith any longer. I don't even have any business cards left. No, that ended on January 31st, and I have not even a tail off of any compensation or anything like that. My 401k has been fully withdrawn and transferred, so it's not even being administered by the firm, so I have no further ties.
Thanks. I just want to make sure. Thanks.
Actually, just a follow-up to that, I was looking at your resume, it does say experience at Reed Smith, 2006 to present. So it
Yeah,
ended in
that was
January,
right.
correct?
The resume was written, when I turned in the application, it was in anticipation of my retirement, so it was done back in December, and I was still, until January 31st, I was still at Reed Smith.
Thank you.
That's all, yeah.
Okay, thank you, Harvey.
Thank you very much.
Be in touch.
I'll excuse myself at this point if the board is going to deliberate further, or?
Yes.
Thank you. Thank you again. It's wonderful to see you.
Thank you, Harvey, appreciate it.
Take care. And happy birthday.
Why is everybody looking at me?
Mr. Chair, I have a question.
Go ahead.
Is there any conflict of discussing this with council in the room, given the history of Reed Smith then?
I don't think so.
Well, I'm not going to be the one opining on any of your deliberations unless asked to, so the decision's fully yours.
Actually, Maytech, with that being said, I think Harvey answered it pretty well, but I would like your opinion on any possible conflict of interest.
And in terms of, so there's two different types of conflict of interest. So one of them is the actual financial conflict of interest. And what other conflict of interest are you necessarily mentioning? Franco's question? I just want to make sure I'm clear.
Yeah, kind of more with what Franco, and that's why I think Harvey answered it, but I'd give you your chance to opine on it as you would. As far as Harvey's ability to remain independent, considering his previous ties with our current firm and your employer, Reed Smith.
Sure. So I have two parts to the question. One is serving as a trustee, and the other was going to Andrew's question on the RFP. I would absolutely, on the second question, I would absolutely expect Harvey to recuse himself from the RFP process altogether if we were to ever put our name in the hat, because that would taint us as well as fiduciary counsel coming in. So that would be my expectation. I would require that he be recused from the RFP process altogether, from beginning to end. So, and then to your second question about whether or not I would feel comfortable or if there is a conflict between Harvey serving as a public trustee and my position as counsel, and if there is a disagreement, two things. One, I do believe that robust discussions are very important, and perhaps, for example, there may be something I may not be seeing or you may not be seeing, and it's worthwhile to have that fulsome discussion. And number two, as fiduciary counsel, we all have the same mission, which is to serve and discharge our fiduciary duties to our members, which is serving the duty of loyalty and all the other fiduciary duties. And so to the extent we disagree on something, it's incumbent on the trustees and myself to try to reach those fiduciary duties in the best way possible. So if there was ever a disagreement to be had, I would welcome the conversation. I don't profess to be the say-all, know-all on fiduciary duties, because it is a collective decision, and I'm not the one acting, for example. I am only an advisor, and the board is the ones with the fiduciary duties to act.
Thank you, I appreciate that. I guess I'll kick some of the conversation off. I thought Gretchen was very experienced.
I'm sorry, one more thing. And, you know, if, for example, if the board does feel you could have a more open and honest, candid discussion, I'm more than happy to step out and recuse ourselves. I just want to make that clear.
I would vote for that.
What's that?
Well, I vote for that.
I would prefer for the entire board to weigh in on that question.
Yeah, I mean, I'm just giving you my view, since you're.
Sure.
And let me.
Prefer that she not be here for that, that's fine, but I don't see a conflict.
I don't have a problem, but I also don't have a problem speaking for just about anyone, so.
I will just go ahead and voluntarily recuse myself. There's just no reason to fight over it. And so before I do, I just want to just reiterate, the board needs to come just on process and procedure before I do. If you would all have to vote on a candidate and reach a majority. If you fail or the motion fails because there's a split vote, you must have another motion to be put on the table, and you can re-vote on that. So I just want to lay out that process for you all. I'm not sure, for example, if you're seeking to vote today and confirm today, so it may take a number of motions, but maybe you guys are all on the same page. So with that, I will go ahead and recuse myself, and Mariah will come with me as well.
People get something to eat while we deliberate, while they're getting out.
I'm gonna take 5 and grab something to eat. I think it's more of a buffet style. It's 12 o'clock, so you guys wanna grab something to eat?
And then we'll pick it up after that. Eshwar jumped the gun, I'm just gonna point that out. I said S.
people get really, Prabhu was like done with
Recording in progress.
All right. Go ahead, Dave, continue.
So, like I said, I don't have a problem talking in front of people, so I'll just kind of go with what my thoughts are and then invite the others to do that. I thought Gretchen has a lot of financial background experience, and I was impressed by her interview. She gave great answers. But in all honesty, I don't think she stacks up to the experience that Harvey presents and the unique experience that he has with knowing the ins and outs of not only our board, but also the way our system operates and the way that we interact with council and plan sponsor, and already has unique relationships. My only concern with Harvey was the conflict of interest. And I personally feel satisfied with his answer, and then also with Maytek's legal opinion on her side. So that's kind of where I stand. I'm kind of in the Harvey boat with that. But like I said, I don't take anything away from Gretchen. Her level of experience doesn't even come close to what his is.
I think I've expressed this before. I think the role of Harvey in terms of the way he has, in fact, educated me as a trustee in his previous role. I think the wealth of knowledge that we have there, I've even sort of wondered, can we bring him back in some capacity? So I think Gretchen has great experience, but there are enough of us investment people on the board. So in terms of diversity of experience and the quality of experience that Harvey brings, given where we are today and what we need, unequivocally for me, that's a yes. That said, I'm very uncomfortable with the conflict of interest for two reasons. One is Maytek has been mentored and brought, has been groomed by Harvey to take this over. So it's a little difficult for me to see a board member who's a very strong, powerful voice with the council who, had this relationship. I'm not talking about Reed Smith as a firm. Perhaps there are other solutions to maybe getting a different partner, or if we do go with Harvey, is really to think about the conflict of interest broadly. With the letter of the rule, I don't see a conflict of interest, but the spirit of the rule, I think there is an opportunity for this to become a problem, and I think maybe there's a creative solution.
I think Gretchen brings great financial expertise, and I think Harvey brings his wealth of experience, not just with our fund or our system, but with so many other systems. And I go back to what Councilwoman Foley said about everything in investments is great. We don't have any issue. So if we look to which trustee adds value to address those issues, I would say maybe Harvey over Gretchen.
There was a couple of things that said. I agree. Gretchen's got experience. Obviously, she sat on some boards. She's retired. She's got the time. And I think she'd be valuable. But a couple of things that Harvey said kind of caught my eye. You go back the last couple years, some of the issues that we've had have been, as he mentioned, the strained relationship with the city. And you can tell by the way he talks that he's got, that calming side, which may be, better than what we've experienced in the past. He also said that his participation in things was very narrow because he was not a board member, he's a consultant. So if we didn't bring it to him, he wasn't going to opine on it. He was not initiating anything. This would be a role where he could initiate something. And he may be very valuable for us working out some of these issues that we're having with the city. And obviously he knows that because he's been here, but I think his answers in that realm were very strong.
My thoughts are very similar to what everybody else is saying. I really like Gretchen. Her experience seemed like she's strong on the financial side. And I agree. I mean, if you look at all our public trustees that we have are coming from, a financial background, and they've been really strong, background and education in that area. And one of our weaknesses is around the governance side, and that's where Harvey's strength is. It was good to hear him today because I felt a calmness come over and a refocus or a perspective that could help us resolve what's going on. I was pleased to hear it was going to be a deal breaker for me, depending on how he answered the conflict of interest question. And so, but I came across that he is well aware of where that line is, and he would do what's best. Even when speaking about if we felt uncomfortable with him being in the room, he would not hesitate to step out. So I mean, I'm in agreement. I think for me, Harvey would be a better choice.
Just to feedback on something you said, Harvey's the one that always said this. As the former CFO and active board member, I wore 2 hats. Dave currently wears 2 hats. Harvey's the one that came up with that. And based on what he was saying there, he understands it's a different hat. So I don't have the problem. And Maytax, she's pretty strong. She's a litigator. I think she knows her lane. I don't see Harvey really causing a problem with that. But that's just my opinion.
I also agree with the majority of opinions here. I'm comfortable with the conflict of interest. I think we have Maytag. I agree. She's very strong, and so she could stand on her own. I think I respect all the things that Harvey said about his ability to make an independent decision. So I am comfortable, and I think he would add more value to the board just because of his background and experience. He'll fit right in. He'll probably be running from day one. Whereas probably nothing against Gretchen. I think her background's great too. I think she'll take a little bit more time to come up to speed. The only thing about Harvey is that every time I listen to him, I feel I'm being lectured by a professor, and I don't know. Sometimes I'm comfortable with that. Sometimes may not be as comfortable.
You guys want to go first?
I already spoke.
Oh, Dick.
Otherwise, I'll make a motion.
Oh, I'm good. So I'm in concurrence with the thoughts on Harvey versus Gretchen. I mean, unfortunately, we only have one spot. So if obviously I would go with Harvey just based on depth of experience, breadth of plans, and his ability to help solve problems because he knows us well. The only thing I would think about, it's not conflict of interest. I think the dynamic with Maytac and Harvey, it may not be an issue, but it's something to keep aware of because he still knows the partners at Reed Smith. He still has a relationship with them no matter what. And if whatever happens, he doesn't agree with the way, it's not a matter of we don't have the same goal. We all have the same goals, fiduciary, right? But it's how you get there. And if he says, oh, well, Maytag, you should have done this. And she's like, well, no, I'm going to do this way. And, maybe he starts to complain to the Reeds. I'm doing a 1% case, but I think that would be the only issue with Harvey, would be that. Otherwise, I think Harvey would be a great addition.
Yeah, I think Howard said it better than I did. I think you articulated my concern better than I articulated my own. I wonder if we could consider, if I could propose a motion that we, I don't know, sorry, Mr. Chair, I don't know if you're ready for a motion, but, sorry, let me stop. Because I had a thought around Reed Smith, but go ahead.
Yeah, thank you. Yeah, I don't take it as be a conflict of any type. Harvey's not that type of person. Because we had Pete Constant here, the council person, and even when that person was wrong, Harvey never argued and so on. He was a teacher, a mediator, and that's why I respected him. His advice I never get talking down to. Again, I think he's a teacher and so on. I've learned so much from him about retirement systems that I thought I knew and I didn't. So he's been great. This young lady, Gretchen, I appreciate her coming. it's like anything else. When you have major challenges or you're at a big firefight, whatever you're at, you stick with what the people is going to be successful and get you through. We have some huge challenges right now. We need all the experience, all the level-headedness, collaboration, and you can't buy that experience. You know, he's been to the Supreme Court, and I'm not knocking this young lady. She can learn. I'm sure she's real sharp. I was impressed. But I'm not gonna, it's just like when you go to a new police chief or a fire chief. Are we having huge problems inside? Let's go outside. But if things are going okay and it could be fixed and repaired, be better, stick with what you got. So I'm gonna support the motion. I believe that's gonna be supporting Harvey. And it's nothing personal, it's what's the best for the plan. And I believe he'll do the best for investments, legal advice, and his fiduciary, because he's got 56 years somewhere near experience, so, thank you.
Yeah, I mean, I think that to address perhaps what Howard and I were concerned about, maybe I'd make a motion to accept Harvey's, to recommend Harvey to the city council, conditional on us accelerating the RFP process and potentially looking for either a new council or a new partner at Reed Smith.
I'm not sure, I'm not sure we need a new partner, I'm just highlighting a potential. It's no reason to switch her out now. I mean, she's doing a great job, it's just, I'm just saying it could happen.
It's a potential, but I think if that was happening, which I don't think it would, I believe she'd probably come to some members of this board and go, hey, we have a problem. I do believe she would do that.
But by the way, this is nothing personal against me.
I know, I understand where you're coming from. But I think that's a worry that we have no evidence of yet.
Yeah, I don't think you jump that gun unless you have it in front of you. You know, if we see evidence that there's a problem, then that's when we can address it. I think addressing it beforehand is more or less putting the cart before the horse. We see there's a potential problem and we're already condemning the person that they're gonna commit that error. And that's, you know, guilty before innocent. So I think you give her the chance to perform and be independent the way most of us think that she will. I think you give Harvey the chance to perform and be independent. And I've only known him a couple of years, but the integrity that he's shown me in those couple of years tell me that he's not going to go to the partners of Reed Smith and badmouth Maytag. That's not who he is. I will defer to some people who've known him longer because I've only known him 2 years.
Yeah, I didn't mean to say. I didn't mean to say.
I'm not suggesting that. Sorry,
No, we understand.
I'm not suggesting that they're guilty before they're proven innocent. I'm suggesting that a governance model that is better for the board. That's where I'm coming from, and anticipating a potential situation where both are critical members. You have a ninth vote and a council whom we rely on heavily. So it's an anticipatory situation as opposed to saying that they're likely to be do this.
Yeah,
Just to clarify.
Yeah, I don't see anything wrong with being aware of it and keeping an eye out for it. What I'm saying is I don't think we should do anything now without having any evidence that is the case. So I think it's very smart to be aware of the possibilities that these could be issues and to have an eye out for them.
Real quick, in the absence of Intech being here, with my, cheerleader boss law degree, we are not agendized to talk about this RFP right now. So we should probably stick to what we're supposed to talk about. That could be something to talk about at a future date. But I do think we have to stay on our agenda, which is to make a recommendation to the city council.
Well, I'll just make one quick comment, and I know what you just said, and maybe this will alleviate some of your concerns. When it comes to our General Fiduciary Council, this board historically has been very good about the RFP around the General Fiduciary Council. The last one was done about 3.5, 4 years ago, and that term is coming up. So within the next year, because we're following the policy, we will be having that discussion. And so So even if Harvey is, elected and city council approves, there might be a crossover of maybe 6 months before an RFP comes out. And I can remove Barbara, but I believe at end of this calendar year.
Yeah, June 30th, 2025.
Okay, so one more fiscal year. And so we could use this opportunity to evaluate that relationship if that's a concern. But yeah, it's close. So.
Can I confirm your motion is to move Harvey forward to the council? And that's it, without the RFP process? I'm willing to second it. I just want to make sure what I'm seconding. Because you kind of put them both together.
When would the RFP process start if
Typically, we would start one between 6 and 3 months before, or 3 to 6 months before.
So, I mean, I think I'm comfortable with the motion that we start the RFP process by Jan 1 of 2025.
I mean, through their normal process?
Through the normal process.
Through the normal process.
Yeah, 6 months.
Okay.
Well,
Again, that's not agendized.
Yeah.
But unfortunately, they're
But
related.
you can have that listed for new business.
Okay. Yeah, I hear you.
But it's a given, it should be happening. So we
Okay.
don't need to make it a motion when that's the normal time frame.
That's fair. Thank you, Andrew. Thank you for keeping me
Yep.
straight.
Okay, so I will entertain a motion.
All right. I'll amend my motion saying that we will recommend Harvey Lieberman to the city council as the 9th public board member, understanding that.
Actually, you know what, hold on a second.
Okay.
Let me get Maytack in there, she does take the notes, if we're not deliberating anymore.
No, I think we're done deliberating personally.
Okay.
Oh, okay, you haven't voted yet.
Yeah, you take the notes, so we want you to hear the motion.
Oh.
Yeah, well, you take the
Okay.
notes. Maybe we should get her in here.
I do, okay, sure.
I have a motion, I'm proposing a motion to recommend Harvey Liederman to council as a public board member, understanding that the RFPs for council are, for will come about either in due course over the next 12 months. You want to change the motion? Go ahead.
I just don't think they should be linked together. I would ask for a friendly amendment of just Harvey, or a recommendation to council, and then if you want to, under proposed new agenda items for the next meeting to discuss the RFP, I think that's the appropriate place to put it.
Okay, fair enough. I'll second that motion.
Wait, let me just make sure I understand clearly what your motion is. So your amendment is to.
Simply present or have Harvey move forward to the next phase and interview with council, not necessarily for confirmation.
And when you say council, you mean the city council?
City council,
Okay.
yes. Sorry, not legal council, city council.
Okay. So just to make sure I'm clear in your motion, so your amendment, so Sunita's motion seemed like it was the same as your amendment, so.
Yeah,
We're
we
just
had a
deleting the
discussion about
language
RFPs.
about the RFP for council. I will propose it in
Okay.
in the proposed agenda. So
Got it,
just
okay.
deleting that language.
And then do you accept that amendment?
Yes.
Okay.
Okay, any further discussion? Hearing none, all those in favor?
Aye.
Opposed?
I'm sorry, who seconded the motion? Was it?
So I ended up making the motion, Sunita seconded it.
Okay.
Or you can switch that the other way.
No worries. I just want to make sure it's accurate for the record.
ask a question? For the candidates, are they waiting outside? Are they to come
I
back
know
in?
Harvey is, I don't know if Gretchen is.
Are you going to be telling them that
Yeah,
they
I was,
can?
I'm gonna go out to see if she's here. Okay, just for clarification on whether it's Maytac or Pam, the next steps would be this goes before council. When would that be? And is it the option to interview Harvey, or is it you will conduct an interview?
Typically, we do interview for those appointments.
Okay.
It's typically not a long interview, but typically that is something that we would want to interview.
Okay.
And when it comes to council, I don't know. I think it may need to go to rules to be included in the agenda, which could be potentially made, go to rules next week, Cheryl? Okay. So probably a couple weeks or so. I'm just guessing though.
Yeah, Mr. Chair, this is Roberto. We will send a letter to the city once your board makes the motion and decide who the candidate is, which you did already. And then we'll check that with the city. And I think as Councilmember Foley indicated, it goes to city administration and it goes to determine when it can be brought for discussion at the next city council meeting. The goal, obviously, I think your goal will be that it goes before your next meeting in June, we will try as best as we can and work with the city to accomplish that.
Okay, good. And then lastly, I just looked through the paperwork and it looks like it was redacted, but some kind of contact information for Gretchen, if someone has that. Staff, perhaps. Okay.
Yes, we do. We will, if she hasn't been contacted, we can let her know that the board has selected Harvey, at least the direction.
Okay. Well, Roberto, you're up.
Yes, thank you, Mr. Chair. Very good discussion. So a couple of things. I wanted to, from the HR standpoint, we are currently on the way on 2 recruitments, one for the senior internal auditor position and another one for the senior analyst position. They're both on the way. The office will be closed on May 27th, later this month, in observance of Memorial Day. And lastly, I wanted to share with you, I think as Councilmember Foley indicated, I did attend the City Council meeting last month on April 16 on the discussion of 2 items. One have to do with the adoption of city policies as recommended by the boards, and also the results of the audit retirement services procurement processes by the city auditor. In terms of the policies and procedures, I think the city council accepted the presentation or the comments, but they made a point that they were not in a position to approve anything at this point, that those are more policies, and they were just accepting the discussion, which was lengthy, and I think you heard some of those comments from Councilmember Foley. In terms of the audit, the city auditor made the presentation. We were there to answer any questions. For the most part, we did agree with the findings. I did, however, wanted to comment on a couple of statements by Councilmember Foley, if you let me, respectfully. So a couple of things. The first one is having to deal with the public statements about having HR issues at the Office of Retirement Services. I have heard that repeatedly. I'm not quite sure exactly what that's referring to. We are well aware that the employees at the city, at the Office of Retirement Services, are city employees, and I do want to borrow some of the comments by the city auditor. Yes, there were some findings that he spoke about during his presentation to City Council, but I think for the most part, he did indicate there were a few deviations, but for the most part, he did mention that the Office of Retirement Services does follow the bulk of the city policies and procedures. So it just struck me as interesting that, you know, there are some other departments of the city that have audits and findings, but, you know, there are no comments in public on this respect when our office, again, for the most part, follow most of the policies and procedures, and we did not contest the fact that certainly there were some findings that we need to work on. And we are. I think the City Council directed the city manager to reach out to our office, and she did through Jennifer Shembri. And we are looking forward to working with the city in a collaborative approach. And in fact, we have had meetings. I think some of the comments by Councilmember Foley in reference to I haven't responded. City Councilmember Davis did request an info memo, which we are working on, and we plan to issue in the next couple of weeks, addressing when and how we intend to implement the recommendations by the city auditor. There was also mention about travel policy, and I just want you to be aware, and also in reference to Councilmember Foley's statements, that that is one that we are working through right now. It hasn't been completed, and I did promise Jennifer Shembri that as soon as we complete our development of the recommended travel policy, that we will share that with the city before we bring it forward to you board for approval. And in fact, we already have some meetings scheduled with the Department of Finance on addressing issues on our cash operations and procurement process. So we are working through it. Again, I do want to thank the city for reaching out to the city manager, and we are again stand ready to work with the city in a collaborative approach on this issue, and I will keep you posted as things will develop. And again, Councilmember Foley, I appreciate your comments. We will be issuing info memo in the next couple of weeks. I just wanted to make sure that we have all the information necessary to respond to that. And lastly, I think you also mentioned, and it's correct, the city is working through the budget, and so I will be there next week attending the budget discussions at the city, in front of City Council, when they come up to approve the budget in general. So those are my comments, Mr. Chair. Happy to answer any questions.
Anyone have any questions for Roberto?
I just want to know what that beeping is in the background.
It's a bird.
I apologize. We have a bird, and I'm sorry. Yes, he likes to speak when I'm talking.
Okay, I think we'll move on then. Going to 4C. Discussion.
Yes, that is myself as well, Mr. Chair. Thank you very much. What we're asking is for your support on recommending an increase on the funds associated with the Cortex contract, which is currently ending on December 31st, 2024. We do need an increase for a couple of reasons. The first one is you heard and you know that Cortex have been very much involved working with staff on the policies and procedures. And so there is some further work that they have completed for which we have to pay for some services. I'm also thinking about your annual performance review process. This year, you will only have to include the CIO, as you know. And Cortex actually work with both boards in this process as further services that they need to be provided. So we're asking for your support and approval on increasing the current amount for the contract, with understanding, obviously, that we will be going on the second half of this calendar year to an RFP process for governance services in general, as recommended by the audit performed by the city auditors. We will do that in anticipation of their contract coming up on December 34th. But before we get to that point, again, we are recommending an increase of the funds actually associated with this contract. Happy to answer any questions.
Motion to approve. Actually, I have a question. Sorry, I know this is a large sum of money, but this is the contract that the city auditor has pointed out on page 17 of his audit. Is that right, Roberto?
I'm not sure if it's page 17, but this is one of the findings, yes, that they noted in their audit. Yes.
Yeah, and just to sort of read it out for your benefit, it says ORS has repeatedly contracted with a consultant without a competitive procurement, and I think you have accepted the findings. So how do we approve this extension in the context of that?
Fair question. We have a contract already that ends on December 31st. You certainly are under no requirement to approve. Please understand, if you do not, we won't be able to actually being able to pay Cortex for services already rendered in reference to the policies and procedures. And of course, that will also mean that they won't be available to work with the board in the annual performance review process coming up June 30th, 2024. So you're absolutely right. You are under no requirement to approve this. It is my recommendation as CEO, I'm recommending to your board to allow us to be able to pay for services rendered and to make sure that you have the services available for your annual performance review process. With understanding, again, as you mentioned, and I stated in the auditor's report, that we will issue a request for proposal for these services in anticipation of Cortex contract coming to an end December 31st, 2024.
So just to make sure, what you're saying is that we need more money to pay them within what, for the services they would perform within this agreement that is still December 31st? Or are we extending it further than December 31st?
We're not extending the contract. The contract ends on December 31st. We're just asking for an increase on funds. Again, we will issue an RFP in anticipation of the contract coming up on December 31st, so that by January 1st, 2025, your board can approve new services for governance, whether it's Cortex or any new firm that will be the result of the request for proposal that will take place probably in the fall of 2024.
Okay, and when will the RFP start? I think Barbara wants to answer.
Well, typically 3 to 6 months before the expiry date of
Okay.
the services coming to an end.
Yeah, given Cortex has been with us since 2009, do you have people lined up to compete against the incumbent? Or, I mean, something to think about. You may not have an answer. Yeah.
That could be the case, but I think, as I mentioned before, and I explained to the city auditor, this is a very niche service that is very typical, provided either by small firms like Cortex or very, very large, expensive organizations like consulting firms like Big Four or investment services. So I personally wouldn't expect a large number of firms actually applying for it, but there is a chance that we get a handful of them, and we will certainly stand ready to go through the process to make sure that we bring forward what we believe will be the best firm for the services requested and the costs associated with it.
Yeah, I mean, I think because I'm on the audit committee, I follow this in a very nuanced way. I think, Roberto, it'll be helpful for the other trustees to also get the context when you're asking for an increase. That would be my feedback.
You understood, yes, I don't disagree. That's why I made the statements, and I appreciate your questions. And again, please understand, this is just my recommendation. You're under no obligation to approve this. So if that's what you would prefer that we do, you certainly can make a motion to that extent. That is not what I'm recommending, and I fully respect where you're coming from. But I wanted the board to have the view on my thoughts on the matter, which is why I'm recommending approve for the increase in cost, with understanding that we have to work performing an RFP for services coming up later this year.
Understood.
Chair, may I ask a question about the RFP process in relation to this one and others actually? It was mentioned twice that an RFP is sent out 3 to 6 months, but it seems to me that these might be complicated RFPs, and is 3 months enough time, or should 6 months be the gold standard on when we get the RFP out for these kind of processes? 3 months just seems short.
Councilmember Foney, you're right. You're right about the 3 months. I know that's what staff had mentioned, but in reality, there are some specific services where 6 months are more the case, and in this particular case, just like it would be for legal or actuarial, yes, 6 months is the term. So it will be probably more about the 6 month mark.
Okay, thank you for that clarification.
You're welcome.
Roberto, this is Dave. So if I understand this correctly, we're not extending the length of the contract. That stays the same. So we're not foregoing any current RFP process that we should go to. This is merely additional monies to pay for services already rendered and
still being rendered,
and still being rendered, and monies going forward to finish what we originally contracted them for. Is that correct?
Correct.
I'll make a motion to approve based on that.
We have a motion.
Oh, we
from
do.
Dick.
I'm sorry. I will second.
Oh, I had one other comment, I'm sorry. I know this is agendized under the audit committee review, but the city auditor report has the information that I was talking about, which is, I think Howard will talk to it later, but it's relevant in the context of Cortex, just to point out.
That's correct.
Okay, any further discussion?
I only have one comment to make about this. It comes to my attention that a First Amendment to the agreement of the governance-related consulting services by and between the Board of Administration of the Police and Fire Department, Retirement Plan, and Cortex Consulting was provided to the board in physical copy at this board meeting and not attached to the agenda and posted within 72 hours. But I do want to make clear for the record that this document was made available to the public at this meeting. In addition, at the same time, it was made available to the board, just as a procedural matter.
Thank you. Okay. All those in favor?
Aye.
Opposed? Okay. Okay, we're on 4D.
Good afternoon, Chair. I will take this item. So this memo is requesting approval to extend the agreement with Levi Ray and Schaub, LRS, for continued use of our pension administration system and to add hosting services for a term of June 30th, 2030 and increase the not to exceed amount by $2,004,000. So Pension Gold is the software used by ORS for administering and paying our pension benefits. And so following an RFP process back in 2014, the selection for the selection of a PAS vendor, the board approved a request to execute an agreement with LRS to provide, implement, host and support a new pension administration system. And that included a 5-year post-production support and maintenance period. So at that time, a separate agreement for hosting services was also approved with a hosting company, iNetU. That company is now actually known as Flexential, so that's our current vendor. And they were the hosting vendor included in that RFP response. So Flexential is a company dedicated to providing cloud hosting and managed hosting services. So the Pension Gold system went live in 2019. The post-implementation 5-year period included in the agreement is set to expire on June 30th, 2024. So the new proposed term would extend the contract by 6 years to June 30th, 2030. Currently, LRS manage our hosting and interfaces with our hosting vendor on behalf of ORS. And ORS has contractual agreements with both of these companies, both LRS and Flexential. So a recent assessment of the pension administration system recommended that ORS update their LRS contract to reflect the support structure currently in place and to more clearly define the roles and responsibilities of each of these parties. So ORS agrees with the recommendation, and so we are requesting to update the contract with LRS to include the hosting services, having one agreement with LRS that includes the hosting at Flexential, the secure hosting site, will address the recommendation. Also, just a note, having LRS managed Flexential hosting solutions is actually a cost savings given the proposed fees from the two vendors. It would be $1,060 less per month going with LRS to provide these services. So staff is recommending the request to execute an agreement with LRS to allow for the continued use of pension be approved.
Mr. Chair, if I may.
Yes.
I just want to break this down for the trustees to understand a little bit more about the pension administration system and how these various vendors interact with each other. So there are two aspects of a pension administration system. There's the software development and maintenance piece. So they develop a software which is called Pension Gold, and LRS developed that. And then there's the data infrastructure piece, where currently all of our data is stored on servers, and now there's been a shift to move to the cloud. And so part of the amendments that we are seeking here, working with our vendor, is to move and migrate from a physical server to the cloud. And so that's why we are eliminating out of Flexential, where LRS would be providing both the maintenance and software support in addition to the cloud hosting for our data as well. And so I just wanted to make that clear. That's part of the ask here, is not only to renew the contract, but also to migrate the data from a physical server to the cloud hosting. And another thing I want to note is that that the LRS developed and built basically our pension gold system. It would make sense for the builder of the product to continue to provide maintenance services for that software system. And so it would be prudent to do so. It's something to consider in terms of understanding where we are in the life cycle of a pension administration system. Pension administration systems in general have a 10-year lifespan once it goes live. And so currently we've only been live, I think, since 2019. We're still in midway through its usefulness as a product. So I wanted to put that out there as well for the board to consider, because changing vendors and having someone come in to work on a product they didn't develop in the midlife of a cycle is something to consider. And lastly, one thing I want to note is that we have been working very closely with the central IT at the city. We've been working with Albert Gihami and Brian Maurer to get the security requirements from the city to integrate with our amendments. So we do have them from them, and we are working in close collaboration on that.
And Barbara, I know you were involved in this project. How long did it take from start to finish to get this system up?
Going back to about 2012, we started the initiative because we had a product in place, and we started to look out at the market and just see if there was other options, and was it prudent to look and see for updated technologies. And at that time we decided it was, and then in 2014 we issued the RFP for a new system, and we did our deliberations, and ultimately in 2015, I think we came to the board. Actually, I might be getting my dates slightly mixed, but so we selected the vendors, and after that, it took the implementation period was a 4-year implementation period, and then in 2019 we went live with the system, and obviously now here we are in 2024. It's hugely disruptive. I mean, it's our core technology. It's what we use to administer all of our pension, and we produce 2 payrolls out of it every month for our retirees and beneficiaries.
Okay, and I just wanted that information out for some of the newer trustees. This was a huge undertaking. So when you look at these contracts and see that they're long extended contracts, it's because these are the people that design the software. It'd be like, taking your MacBook to Windows and go, can you fix this software? It's probably not going to work. So just so the understanding of why we have such long contracts. Any discussion on this?
I think, is it better for us that maybe one of the committees reviews like all the contracts, like audit committee or governance committee? So when it comes before the board, we know the committee has blessed it, right? Just like, the IC kind of reviews, the strategic asset allocation and all of those things. So, we've had an in-depth discussion of it.
I would be open to that, but if you're going to have a committee discuss it, then come before this board and everybody discuss it again, it's kind of counterproductive. That would be my concern.
Except that we now know that the committee has looked at it in depth,
yes.
And I don't need to,
Yeah, and I'm not against it.
Yeah.
We just have to figure out which committee.
When investment things come to
Yeah.
the full board, I know you guys have already delved into it and looked at it 6 ways from sideways.
Yeah.
And that gives me a little more confidence in what we're doing. So I kind of like that idea as a perspective moving forward.
Yeah, we would just need to figure out which committee that would go to.
Yeah.
Okay, I'll entertain a motion.
I had a question.
Oh, go ahead.
Just so I understand, so in the past, LRS had a contract with us on the software, and then we had the hosting part directly with Flexential. And now we're saving money per month if we actually have only a relationship with LRS and they manage Flexential. Is that right? Yeah. So we're saving money by having an intermediary.
Yes.
Okay, that's pretty.
Actually, I think
pretty-
it's a little different. Flex Central help manage the hard server, and we're now moving to a cloud base,
Right.
which LRS can manage at a cloud base. So we no longer need Flex Central to have the maintenance on a physical server because we're moving
Well,
into
it's still
cloud.
it's still a server. I mean, it's just, yeah.
So Flex Central would still provide the server piece, but we would be using the cloud aspect of their
Yeah,
services.
Okay, no, okay. And then sort of a detailed question. It says here, the secretary in the background was, the board approved secretary to negotiate something. Who was the secretary?
That's Roberto, the CEO.
Oh, okay.
The secretary of the board.
Oh, okay, great.
Yes, that's the CEO.
Okay, all right, thanks.
Just a question, do we save money if we're not using the server?
Well, we're going to be spending, among $2,004,000 over the next 6 years.
To
But
move it,
with
to
this,
move it to the cloud?
no, not just to
No.
move it to the cloud. For the next 6 years, for them to provide the hosting and the maintenance and support for the software.
Right.
But this new structure is going to cost us less if we go with our LRS vendor, and plus it does address the audit recommendation to combine the contracts to more closely define the roles and responsibilities, because our current vendor has provided us support and does interface with our hosting vendor. It's not, all the services they provide us are not necessarily clearly written in the current contract, and we want to address that.
Okay, I guess I'm still a little confused. I was just wondering, bottom line, did we save money from somewhere else?
Yes.
Okay, how much money was that we saved?
I'm sorry, what?
How much money did we save by
I
going in this direction?
haven't actually done that calculation, but
According to the memo, it says 1,060 less
yes,
per
per
month.
month.
Yeah.
Per month,
Oh,
over the 6 years.
okay, thank you.
When is this cutover or transition supposed to happen?
Well, so Flex Central, Flex Central reached out to us when they were wanting us to look at some of their new terms and conditions for the renewal of the contract. Their contract is set to expire, I think, in June or the end of the year. I can't remember which of the two. But to your question of when the transition needs to occur from server to cloud, Flex Central is moving all its products from server to cloud by the end of the year, is what
Yeah,
we've been
December
told by the vendor.
31st, 2024.
And is our IT, I assume they're on top of all this, because there's always that risk when they transition their infrastructure that, we get caught up in all the
Yes.
whatever
And
challenges
our
they have.
vendor, LRS, are going to be managing that whole migration.
Okay, so we get to yell at them if things go sideways. Okay.
Can I ask you which audit finding were you talking about?
It was a city audit, I'm sorry, it was not a city auditor. It was a city audit that was asked for, and it wasn't an audit, it was an assessment, like a cyber assessment, and they were done recently.
Oh, this is not to do with your voice.
No.
So trustee Ganapati, that's the cybersecurity assessment that we will bring to you board for presentation in closed session at your next meeting in June by a city IT staff, which we have been working for in collaboration, and they were instrumental, I think, as Council Chin indicated, to make sure that this contract actually includes the requirements suggested and recommended by the city for this process and to improve the cybersecurity of our applications. Did I say that correctly, Barbara? Is that correct, Maytag?
Yes. Thank you. Just one follow-up to Howard's question. So, is our IT group or the city's IT group involved in any way in the migration, or is it entirely the vendors?
No, our vendor will be managing all of that.
Okay.
LRS.
Okay, it's been a while. I forgot if we had a motion or anything on this yet.
We have a motion second? No? I made the motion to approve.
Okay, we got a motion by Dave. We have a second?
Second.
Was that Howard?
Yeah, second. Trustee.
Okay, any further discussion? All those in favor? Aye. Opposed? Okay. Going to 4E.
Deputy Director. So this memo is requesting approval to negotiate and execute a fifth amendment agreement with Marty Boyer of Communications Advantage to extend the agreement through June 30th, 2025. No additional budget is being requested, just the term date to be modified. And Ms. Boyer, she primarily works with ORS on our Retirement Connection newsletter. And obviously, per board policy, the CEO is authorised to enter into contracts up to 50,000 in value. But this contract, it has a value of 75,000, so we need to come in front of you board to get approval.
So under the new procurement policies, what would be the requirement to do a RFP? Or under the maybe newly adopted, maybe I should say that.
Well, that term had not been firmly defined. That was one of those elements where...
Still under
discussion. It could be 5, it could be 6, 3 to 6 years. But there wasn't a firm period defined yet in the draft.
Okay. I guess my concern is, we keep getting used to these extensions. And while I understand we're still working on the policies, are we just getting into this rhythm of extending? And
So, Councilmember, Trustee Ganapati, I think that's a very good comment, very good question. I completely, wholeheartedly agree with you. And I think, as Barbara indicated, we're still working through this process. But in this particular case, I feel confident supporting this request for 2 reasons. We're not really asking for an increase in the funds. And the reality is that this is a one-person team, and she's actually was going to retire this year and agreed to work with us for another year. No extra funds because we have enough already in the contract. So I thought it was a win-win for the office while we still work through the process. So what are the final policies and procedures that will be implemented? We can use her support and expertise. Barbara mentioned the newsletter, but she also was critical and very helpful to us and still support us on our communication strategy, specifically as it relates to social media. So she has been very helpful on that as well.
Thanks.
I don't know if you have anything else to add, Barbara.
No, just looking for approval to extend that contract.
How much money is left in the contract?
There's 19,600 approximately.
Okay, I'll entertain a motion.
Motion to approve.
Motion Dave, second by Dick. All those in favor? Aye. Opposed?
Give him 25,000 to kill that bird.
Okay, moving on to retirements. We have 1 retirement, Eric C. Hovey, Police Sergeant, Police Department, effective May 11th, 2024, with 26.65 years of service. Okay, we have a motion, Dick, second by Dave. All those in favor? Aye. Aye. Opposed? Okay. Death and survivorship notification. Notification of the death of Richard K. Saito, Police Lieutenant, retired December 30th, 2006, died March 14th, 2024. Survivorship benefits to Diana Sato, spouse. Notification of the death of Ralph J. Dillon, fire engineer, retired January 29, 2003, died March 7th, 2024. survivor benefits to Susan Dillon, spouse. Notification of the death of Warren F. Schuler, firefighter, retired July 1st, 1995, died March 11th, 2024, no survivorship benefits. Notification of the death of Winsford Wheatley, fire engineer, retired December 3rd, 1986, died March 25th, 2024, survivorship benefits to Maria Wheatley, spouse. I'll have a moment of silence. Okay, would anyone like to say anything?
Well, yes, it's always sad. I worked with all three of them. It's a sad time and the best of their families, and thank you for their service.
Yeah, I'll speak to Rich. It's interesting. I worked for him when he was active. He was a lieutenant. I was an officer. He retired, went into the reserve unit, and he worked for me because I was the reserve unit director. Rich loved his community, and up until his last days, he gave back to the community, specifically Japantown. On his last day, he was at Coffee with a Cop. He gave everything for this community, and he's an amazing man, and he will be missed.
All right, thank you. Okay, we're moving on to 771, Investment Committee.
So we did have a meeting. We discussed things which came up before the board today: the strategic asset allocation, private market pacing, and the consultant review.
Okay, we will receive and file the minutes. Audit
yeah.
risk.
Yeah, we actually have a special meeting coming up this month, investment committee.
The update, we had a meeting, a special audit and risk joint audit committee meeting on April 11th. Joe Royce and Ali Polly, city auditors, presented their report, which dealt with the ORS and following or not consistently following practices with respect to procurement, controls, and so forth. And there are several recommendations that were mentioned. This will be discussed actually in 7.2C. Also discussed changes to the internal audit charter, which will also be discussed later in this update. And that dealt with potentially on the hiring as well as performance review of the internal auditor. And finally, we also discussed the update on the letter to Bank of New York Mellon on the changes in the restatement of the returns.
Okay. Do we have to handle anything else in this?
Yes, so
Yeah.
there is a discussion and action
That's what I
on
thought.
item 7.2D regarding the internal auditor charter changes to reflect the discussions that occurred on March 1st. So the change in this particular internal audit charter that's attached to your agenda is a very narrow one. We remove the word flexible at the direction of the committee from the audit plan, so that way there's more definitive audit plan that everybody's on board with and understands. At the next audit committee meeting, that we will be bringing forward another further change to the audit charter, so that at the direction of the committee to cover what Howard discussed, which is performance evaluation and the hiring process for the internal auditor position. So that's coming at a later date. The only change in this particular audit or this charter change here is just a removal of the word flexible. But we do need a discussion and action to approve that.
Does anyone have questions on that? Okay, hearing none, I'll entertain a motion. Got a motion, Dick? Second, Sunita. All those in favor?
Aye.
Opposed?
And then there's one more on
Yeah.
item 7.2F,
F.
if I may.
Yep.
So this goes to what Trustee Lee had mentioned about the hiring process for the internal audit, senior internal auditor position that's currently vacant. So at the audit committee meeting, we had the joint audit committee voted to recommend to the board the following: to create an ad hoc committee comprising of trustee Dave Wilson on the police and fire side and trustee Debbie Abbott from the federated side to serve in an advisory role to the CEO and to assist in the evaluation of the finalist candidates for the internal auditor position until the position is filled, at which point the ad hoc committee would dissolve. And so that process that I had just read as a recommendation to the board is not currently in our charter. And so that's the future charter change that's going to happen. But for the time being, they did make a motion to create this ad hoc committee, and it's being recommended to this board to approve that.
Okay, is there any questions? Hearing none, I'll entertain a motion.
Actually, I was on the audit committee, but I have a question. So does the CEO participate in the hiring?
Yes.
Okay.
Yes, so the CEO is the one who drives the process for the hiring, but the two the ad hoc liaisons from the two boards would also interview the finalists and also provide their input.
And the reporting, reports to the audit committee or the internal auditor?
I'm sorry, I couldn't hear the question.
Who does the auditor report to?
The internal auditor, as in the audit charter, provides that it reports to two different people, different entities. Ooh. One of them is the CEO. It reports on the day-to-day operations to the CEO. However, it does have a dotted line up to the joint audit committee itself. And because it reports to the audit committee itself, the committee itself decided that they would like to participate in the performance evaluation process.
I think it was functional versus administrative.
Right, that's right. Functionally to the audit committee, and what was the other word? Administratively to the CEO.
Okay.
And it's always been that way. It's not a change.
Yeah, that didn't change. The
Okay.
only change was the ad hoc committee to advise on hiring and evaluations.
Okay, I have a motion. Do I have a second?
Second.
A second.
Who was
Dave?
the first? I'm sorry.
I think Dick.
About 95%.
All those in favor?
Aye.
Opposed? Okay. We'll receive and file the minutes. And then governance, we have not had a meeting since our last one.
I have a question on 7.2E. Is there any update?
I think Roberto would have that update. Roberto, on the letter to Bank of New York Mellon.
Yes, I apologize. It's just I'm aware that the blur is becoming a problem for all of you, so I'm trying to stay quiet. We did issue the letter this week by email and by mail, so it has been received by Bank of New York Mellon, and it's signed by myself and both board chairs.
Thanks.
All right, thank you.
Once we hear anything, we will certainly come back to you and keep you posted.
Great, thank you.
You're welcome.
Okay, 7.4, disability.
Yeah, we'll meet at the headquarters building at 10 o'clock on May 6th, and then you have the meeting minutes from March 11th.
We'll receive and file the minutes. Okay, JPC.
So we continue to move the process forward in terms of hiring the CEO. I'll let Andrew give some more details.
No, I have nothing additional. It's going smoothly, and yeah, we'll have updates for you guys soon.
Can I ask a question about, what's your timing on that?
Our time meeting is to have someone in place before Roberto retires.
When is that?
Around August.
Oh, just curious.
Ideally about a month before, so he could kind of onboard them a little bit.
Wow, got it, okay, thanks.
Receive and file the minutes from both the March 19th and the April 5th meeting. Proposed agenda items.
I just want to bring it up for discussion. We alluded to it a little earlier. City IT gave a presentation to Federated. That presentation was actually supposed to happen today with us through agending. It wasn't agendized in a timely manner, so we couldn't do it. Just open for discussion amongst the board members. As Roberto mentioned, we could do it next board meeting, or if you feel it's important enough that we try to get a special meeting together to do beforehand. So I just kind of wanted to throw that out and kind of get everybody else's opinions. No opinions.
I would rather do it sooner than later. Obviously, I don't know how long the presentation would be. It does make the meetings longer, but I also recognize that it's difficult to get everybody together, excuse me, mid-board meeting weeks.
I would have also ask a procedural question. Would that be allowed to be a hybrid meeting?
So long as it's a physical form.
Okay.
So IC is me have a special meeting, maybe we can do it the same day.
But may I just say one more thing? So for people who are attending remotely, you still have to comply with either AB 2449's requirement to attend remotely and or the, or the traditional Brown Act requirements for attending remotely.
Right.
Otherwise, you're required to be in person.
Okay, I know I can what date is your meeting that you're talking
I
about?
don't remember. How do I look searching?
May 17th?
I hate iPads.
14th is better.
Yeah, 14th at 11 a.m.
Okay.
I can physically be here the 14th, just so to help see if we would even have a quorum. Yes.
No, yeah. But is that, by the way, this is Roberto, that meeting, if it takes place, and Cynthia, I'm hoping you're taking notes, so you can go around and ask by email to trustees their availability for that day. This meeting will actually be a closed session meeting. It will take anywhere, depending on questions by the board, 30 minutes to an hour. And we will have to make sure that city staff is available. May 14th, is that a Wednesday?
Tuesday.
The Tuesday is difficult because that's the city council meeting. And I'm not sure how available the city staff that is making the presentation will actually be available. I mean, they could be, I'm not saying that it's not possible, but in addition to checking out the availability of the trustees, Cynthia, we will have to reach out to the same players that attended the Fed meeting. You can actually reach out to me on that and see about their availability for the day and the time. I'm assuming it would actually be in our free floor in our offices.
About what time does your meeting end typically?
Probably, what, 12:30 at the latest? 12:30.
Okay, so if we can maybe have staff, because we'll need to know who can make it, email the stakeholders, the participants that we need to be able to be there. And if we can get a physical quorum, have the other people attend, and city staff, if it all falls into place, we'll do it after our IC committee meeting on the 14th. If not, then we'll go ahead and wait until the June board meeting.
I would strongly recommend to do it before the IC meeting, so I don't know how long the IC meeting is gonna take. And what time is the IC meeting?
Oh, jeez.
It's 11. I don't expect it to be more than 1 hour.
Well,
Unless
but
Prabhu
you guys-
just keeps objecting.
I was thinking you started at 9, like we do, but if you start at 11, then we can do something before your meeting and get it done in
We will
time.
need at least an hour, so let's do this. Cynthia, I'm sure you're listening. Let's check with, I will send you an email with the people that we need to check at the city about their availability. Because on Tuesdays, they also have to attend closed session with the city council, which is in the morning. So we'll have to check their availability for the morning, the afternoon, or the 14th. And then after we have the information, we will reach out to the boards about whether we do it an hour before the IC or an hour after. Does that work?
Yeah, I'd be happy with that. And like I said, at least we're trying to get it done beforehand, and if we can, that's great. If not, we have the backup that will agendize it for June.
Okay.
I had a second proposed agenda. If Harvey Lederman gets appointed by the city, or his appointment gets approved by the city council, I might propose an agenda that we discuss the RFP process for council and the timing of that at the meeting after he gets confirmed, if he does, of course.
And just to be clear, you're speaking about fiduciary council or all council, including disability council?
No,
Just fiduciary.
council.
Okay, thanks.
we don't have any other, then we're adjourned.